Let's see. Oh, now we have sound. Good morning, everyone, here in Sharm el-Sheikh, but also everyone on the live stream. And a warm welcome to this Finance Day of COP27. My name is Fredrik Ekström. I am president of Nasdaq Stockholm, the exchange in Sweden. And with us today, we have a very strong panel. We have, first of all, here from Minesto, CEO Martin Edlund. Welcome. We have from the Swedish Energy Agency, Verena Adamheit. Was that correct? Good. You are country manager for US, and we will come back to that. That's an interesting role. And then we also have Normative and Alexander Schmidt, who is head of research and science at Normative. And we will have a fourth member of the panel quite soon. Anders Elgerud, CEO of Stockholm Exergi, is on his way. He is stuck in Egypt traffic. So why do we have a finance day at an environmental conference? I think without capital, without allocation of capital into both green companies and also not so green companies but that are under transition, we will never be able to reach any targets of the Paris Agreement or any other targets set to reach a more sustainable finance market and society. And in this reallocation of capital that needs to happen at quite dramatic levels, I think collaboration is key. Collaboration between public funding, private funding, and within private funding I'm talking about exchange, you could be bank debt, private equity, and all of this has to work together to really help companies grow as part of doing this transition. In Sweden, and I should also say thank you to Business Sweden for arranging this and to having the opportunity to have this dialogue today with this panel and with other companies that are here promoting Sweden, but also explaining what we actually do in Sweden around this transition. And in the Nordic region, and especially in Sweden, we have been the leading market for growth companies in Europe, the leading market for green tech companies. And many of these green tech companies, they have the innovation and the solution that we really need to be able to solve some of the challenges we have in respect of the climate. So I think we should be really proud of our market and the innovation and the entrepreneurship that exists in Sweden. And there is an ecosystem here with public agencies like the Swedish Energy Agency, entrepreneurs, startups, advisors, us at Nasdaq, but the whole ecosystem also with investors that support the journey of these growth companies, because many companies comes to the market in an IPO, but they need to continue to raise capital through their journey to be able to grow and in the long run hopefully become a large company and create jobs and welfare for society. So with that introduction, I think we have a fantastic panel that will help us explain a little bit about the importance of the allocation of capital, about green tech companies, and a little bit share their perspective of their own journey. So with that, I would like to maybe ask Martin the first question. Minesto was, if I correctly understand, originally a spin-off from a company called Saab, and then you have received public funding, you have come to the exchange, you are listed companies today. How have this journey with a combination of public funding and private company impacted your company?
It's actually been in the core of maybe this one works better. Yes, I think that Minesto, we are a company that turns ocean currents and tidal currents into renewable electricity. So it's a highly novel company from the aircraft manufacturer Saab, a spin-out. And our journey, I think, is a good example of a company that really has benefited from the synergistic, the collaborative environment in Sweden around public and private funding. So we started out as a spin-out from Saab, was put in an incubator called Chalmers School of Entrepreneurship in Gothenburg at the Technical University. So already there were sort of public funding going into setting up the company. Then as a pre-listed journey for several years to prove the technology with private and public money in combination. And then a listing in 2016 at Nasdaq, 2015-2016. And that listing was enabled also by public grants, EU funding. So basically the offer to the initial investors was that by investing in Minesto, you double your investments because we can bring down public grants at the same level as the equity coming into the company. And then we've had a few more rounds, and we're up to now 30,000 shareholders on Nasdaq First North growth markets. So I think it's one of actually many companies that has sort of benefited from this, if we may call it, ecosystem or synergistic setup.
Thank you. And Verena, the Swedish Energy Agency, what do you do? And as I understand, you also been part of this journey of Minesto. Can you tell a little bit more how you see your role in helping green tech companies and what you actually do to support them?
Yes, thank you. Can you hear me? Yes. Thank you very much for having us. We are from the Swedish Energy Agency, a government agency with the mission to lead society's transformation towards a sustainable energy system. And we have actually a quite broad assignment which leads from providing expert knowledge over to disseminating information to make energy transition happen more quickly, to financing companies and research, and that's what my pillar is within. And I'm very happy to stand next to Minesto, one of our portfolio companies, and to see you succeed. So this is great. Coming back to your question, what we do within the third pillar of financing research, this is what we do in both direct financial support and indirect support. And this is quite unique, I guess, supporting companies throughout the whole innovation chain, from fundamental research to verification with customers, to pilots and demonstration, all this commercialization bid to internationalization also. And here we have support programs focusing on chosen markets, the US, which is my role, one of them, and also with platforms. We're supporting certain focus areas which we have chosen because they represent Swedish key strengths, such smart cities, sustainable heating and cooling, sustainable healthcare, bioenergy, which we really can in Sweden. So that's what we do, which is our assignment. And then the second thing is that we also support projects. And this is our largest assignment, for example, with our program, the Industrial Leap, which is all about decarbonizing the industry.
And if I can ask you a follow-up question here, what is sort of, when you select this project and supporting companies, what are your sort of criteria and what is you sort of, how do you define success for an investment from the Swedish Energy Agency?
Yes, this is of course one of the most central questions we have to answer. So the first thing is of course the innovation, the product, the solution. Will it make impact? Will it contribute to reducing greenhouse gas emissions? That's of course the most obvious thing. But then it's also about feasibility. It's about the outreach, it's about the impact possibilities, and it's of course about the team. And here we also like to see both women and men in the team, so that's really what is important to us. And as regards internationalization, we also want to see that the company has kind of a proven technology, has a strong foothold in Sweden, has customers to make it on the international markets. And here we also want to see a clear business plan of the companies.
Thank you. Alexander, Verena talked about impact and Normative. You measure impact in a specific way. Can you tell us a little bit how you see your role as a green tech company and how you help define impact.
Yes, I'm happy to. When you can hear me? Yeah, perfect. So I think it's super interesting just what you described. So Normative, our mission is to make known and reduce the sustainability impact of all economic activities on the planet. So that's meaning like we have our own growth journey in kind of the green tech space, if you want, like as a software as a service solution. At the same time, we help, of course, to make known and reduce the impact other companies have. So especially in the financial sector, we have right now a partnership with Nordea to help them to accurately assess the portfolio emissions, to then also help to funnel investments into companies that are, you can say, comparatively more sustainable. And we also yesterday talked about a new scoring framework that actually helps to assess how do we capture sustainability in a single number to make it really easy on the surface, to single number to see how far are they in the transition to net zero emissions. And this kind of like the dual role we have, our own growth journey through investors and investments. At the same time, we're helping to make it more transparent for everyone to know where to invest, to avoid investing in the end in stranded assets.
So you support corporates, but you actually then also support investors by providing data on the impact of companies.
I would say by extension, yeah, definitely.
Yeah.
So they are all, you would say, in the portfolio of partners and customers. So we are definitely, we see the largest impact that we can have is working together with enterprises through the ranks. It can be banks like SEB, one of our customers, Nordea. It can also be just, the large enterprises who are all present here today, for example. So they have these large value chains. They need to decarbonize the value chains. That is a huge, huge challenge for them. And we help them to make it really transparent. Where do the hotspots sit in their portfolio or in their value chains? That is kind of the flip side. Finance's portfolio for a manufacturing company. It's the physical value chain. And then they have the full oversight to make actually informed decisions based on our measurements of carbon emissions.
Okay, thank you. And Martin, renewable energy is super high on the agenda. And it's almost impossible to not be in an event here at COP and not hear the word renewable energy. So does that mean that your future is super bright and there is no challenges, or what are the opportunities and also challenges for a company like Minesto, who are still quite early in your journey?
Yeah, I think that most companies, and Minesto certainly also, face a rather large challenge in that to prove your technology, it's not just enough to produce to the grid as we're doing at small scale today. But it's a matter of doing rather large infrastructure investments to reach project levelized cost of energy, so to speak. And that means that you have to draw down different sources of funding for your projects in parallel with running your business and building your capacity to deliver and increase performance of what you're doing. So I think that challenge is quite significant because those investments are high relative to the core investments in the company. And if you look at the capital markets and funds labeled green funds, it's still very, let's say, banking driven in many aspects, where a smaller return on your investments is more sought than high risk projects. And if it's a first of a kind renewable energy system that is going to be deployed at large scale, there are a risk factor to the investment. So I think that's one of the major challenges. On the other hand, as you say, the climate for investments in renewable energy has never been as positive and optimistic as it is today. And I think that the combination of the international development banks, EU structures, national entities such as the Swedish Energy Agency enables those project investments by lowering the risk factor, by providing sort of a financial cushion into the projects. So by combining those sources, I'd say that it's possible to overcome the scale of the investments needed.
When you talk about renewable energy, there is a lot of focus on wind power, solar power, and the politicians has a lot of focus on those type of renewable sources. A company that are more innovative, looking for maybe sort of solutions that are not as established yet as wind power, for example. Is it easy to get attraction, or is all focus on these large established renewable energy sources, or can you get attraction?
I think if you look at where we are with our energy transition in the areas of the world where we have somewhat higher level of penetration for the renewables, we see the clear challenges of just betting on solar and wind. It's intermittent, and the concept of base load renewables is potentially the number one sales argument in relationship to investors for us. So the complementarity is known. We know that if we overinvest in wind for one energy system, one energy market, we're going to end into trouble, both when the wind is blowing a lot and when the wind is not blowing. So cost-wise, you have to add a lot of storage and compensation on the higher system level of the energy system. And that is an open door for us where we are now, definitely, because tides and ocean currents are baseload type of energy.
And Verena, Martin mentioned that for many maybe more innovative companies, startup, even if Minesto is not a startup, the public funding element of it as a risk reducing part for other private investors to come into that company or project, that must be a very important role for you to sort of play that sort of risk reducing factor by coming in. And how do you see the collaboration between sort of you representing public funding and private funding? How important is it, and is it working well, or can we do better?
Yes, that's of course the initial task of a state, to go in as a first investor, as you want to put it like that. We give grants, we don't invest in companies, but that's what we do, to go into these early companies with the seed funding, with this also what I mentioned with the verification for CAN, to pave the way for other investors that then eventually can come in. So we take as a state the biggest risk, and I think it's very important because we all need to work together in this famous innovation ecosystem to make innovation come true. And we as a public funder, we are of course a big player in this, but then others have to come in, the investors and the corporates have to work together with the startups. And we also have the academic side, of course, which provides research and can go together in projects. So we see us as one of many players within the whole system. And I think we are, if I may say this very humbly, we are doing already well, but of course there's always room for improvement. We have to engage in this dialogue even better, to be more transparent of what our expectations are, what the expectations of the others are, to make sure that we understand each other, because sometimes there's a lack of knowledge, there's a lack of understanding, and the lack of requirements. We as a government agency have very clear requirements. For a company, you certainly know what to speak about. So maybe this communicating bit is the one we can improve on.
Alexander?
I can actually add to this, because I think you're entirely right, communication and information. What we often experience is also that information has to come from some kind of data source, and especially if you talk about green investments or investments that are labeled sustainable or green, oftentimes there's a lack of data that we experience there on our customer side, or the customer experience a lack of data. So that is important to kind of bridge that gap. We see also that many companies who are committed publicly to actually, improve their own footprint, improve their own sustainability journey, they themselves still have a lack of data, a lack of insights into how exactly can they follow through with this commitment. So that's, I think, super important to mention as well. Information, communication, and data kind of as the foundation. And for us, it's kind of the accurate data to assess a company's environmental impact.
Yeah, and
May I comment
Of
directly
course.
on that? Because we see that this information you're speaking about is increasingly sought after. You mentioned the word labeling, this green labeling, and this is something I think will not work in the future because the objectification of this labeling is increasingly important to make sure that you don't say words, but that you really live your message, and you have to prove that with data.
100%. Do you want to?
Yeah, I also wanted to add that it's not just about financing. When you're through an evaluation with, for example, the Swedish Energy Agency, it's also a stamp of quality. And that's something you see also when you I mean, we are sort of an export company 100% because we don't have a natural resource in Sweden. But by having sort of that backing from the official Sweden, so to speak, is a key factor to create certainty in an uncertain context, so to speak.
Yeah, and we are in this transition. We have science-based target initiatives as a way to guideline corporates on how to set targets to reach net zero at a certain time in the future. And we now have, I think, around 2,500 companies worldwide that have signed science-based target initiatives, meaning that they have committed to set targets and to follow through. And where we are in the process now is that many companies do set targets, they get the targets approved, but how do we follow up? How do we know that the targets set are also being delivered on? And Alexander, I assume that's where Normative come in to some extent at least.
100%. Yes, it's so funny. We chatted a bit about it before. So this number around like a bit more than 2,000 commitments to science-based, actually approved commitments to science-based targets. We talked about this actually on Monday with Professor Johan Rockström a bit. We have done some research on how this actually would impact global emissions. If you look at if those companies were to follow through with their commitments. So we had this sample of 1,000 publicly traded companies that have set targets that are in line with the Paris Agreement, so meaning we limit global warming to 1.5 degrees Celsius. And if you add those emissions up, if you really look at the entire impact, and that is the important piece, we really have to look at the entire impact, not just on, let's say, what comes out of their own chimneys or tailpipes. If we add all of those up, so value chain, investment portfolios, we actually reach 77% of global emissions from fossil fuels and industry. So these 1,000 companies, large companies, they can actually have a huge impact. If, and there's a big if, of course, if they were to follow through with, first of all, accurate measurement, because we still see a huge gap. If we now look at what companies have committed to in terms of CO2 amount, we're not there. We have the commitments, but the CO2 amount that is right now behind the commitments is far off. So there is this gap, this logical gap between, yes, I want to do it, at the same time, I might be struggling to put this into an actionable plan that is accurate. And it's also to your point, we have this, you didn't mention the word, but we often talk about unintentional greenwashing to a certain degree. You might commit, sincerely, genuinely to a target, but due to lack of data, you fall into this trap of being ultimately exposed as, hey, there is this gap. And this is, of course, especially for a publicly traded company, this is something that can have a huge reputational and brand equity risk.
Thank you. And we are now halfway through this panel a little bit, and that's when the energy used to dip a little bit. So we're going to invite Anders from Stockholm Exergi to enter the stage to create new energy into the panel and a new discussion or element of things. Welcome, Anders.
Thanks a lot.
And you are the CEO of Stockholm Exergi, and we have been talking a lot about sort of green tech companies, the need of funding, the collaboration between public funding and private funding. And from your perspective, you have a very big project ongoing around biomass carbon capture storage as part of your business. How important is it for you in relation to public and private funding as a combination of making this journey?
Thanks, Fredrik, for the question, and I think it's totally crucial that we both have public funding and also private funding. When we look at this project, which we are aiming to fulfill, it's actually a project which we are pioneer, definitely. have done this before in this size. We're doing it. Okay, it's it's another. Okay, it's just to continue. So when setting up this industry, which might be a very, very large industry, and also is necessary for the rest of the world, we need really removal of carbon dioxide. And then starting that kind of project, for us as a company, we're a very mid-sized, small energy company in Sweden, it's impossible, more or less. It's innovation, it's a large investments, we need public funding in the start, but then we need to see the market potential is enormous, and then we need to also have the opportunity also to have private funding, and then we are looking into how can we combine these two funding as way of funding.
We have talked quite a lot about renewable energy as a super important source of this sustainable transition. This carbon capture and storage, what is that? What is that in relation to renewable energy? And is that a potential new industry segment within Sweden where Sweden could be a leader, do you think?
Definitely. I think in Sweden we have the opportunity, since there is a lot of forest in Sweden. There will be a lot of residues from the forest which otherwise will be lost. That are the main fuel we are using. It's the only fuel we are using in this plant. Then we are actually producing both electricity, then heat, and then we are actually capturing the CO2 from the chimney on the flue gases. And that technology is extremely resource efficient, since we also have district heating in Sweden. So we utilize the excess heat from the whole process, meaning that we actually increase the efficiency of the whole process with 3 to 5%. So without utilizing more biomass, without using more other energy, we can actually capture carbon in the magnitude in one of our plant, as same as the emission from all the traffic in Stockholm, a large city, during a whole year. And then actually when we have captured the carbon, we can actually transport it in liquefied form and then permanently store it under sea level in rock, which are actually fantastic way of getting away and really remove carbon from the atmosphere without using more resources, without harming the environment, and actually doing it in a permanent way for thousands of years.
I don't think people understand what panel we have here today. This must be the best panel in COP. Look at it. You have renewable energy, the solution for how to take down current emission from the 50 gigaton levels. We have then what we cannot reduce, we can remove with BioCSS. All of this needs money, so we have the Swedish Energy Agency to support that. And we have Normative to help calculate the impact of everything. So if you can talk together now, maybe we have a really good solution after this, how to move forward. But with that, let's move on. And I have a question for you, Verena. Your role, Country Manager US for Sweden Energy Agency. What role does the Swedish Energy Agency has in the US?
Thank you for giving me the opportunity to pitch the new Sweden-US Green Transition Initiative that we have launched this year, because this is a very important project for us, and we spoke about communicating and collaborating, and this is kind of a way of new collaboration. So we have started this initiative together with our partners from Business Sweden, the Sweden Innovation Agency, Vinnova, and the Embassy in Washington, to promote Sweden as a key partner for the US green transition and provide information about the Swedish key solutions and products to make this energy transition happen. So we have soon 4 resources in place in Washington, 3 in Washington, 1 in the Silicon Valley. Together we have agreed on several working streams which we deem are of utmost importance. And there is, for example, supporting SMEs, Swedish SMEs. This is to promote Sweden as an investment destination, because we have very good conditions for investments in Sweden. We want to work for establishing system demonstrators. We of course want to engage in conferences and trade fairs to give Swedish companies a chance to expose their message. So this is what we think very important, because we see that there are large opportunities in the US right now, and these resources that we have in place are supposed to be kind of a matchmaker, a mediator between Swedish interests and also US interests. So what we really want to do is to reach out a hand, and that's what our role as initiators is. That's what we can do. We can initiate, we can give offers, we can make the first step, as we were also in earlier. So we are looking after project ideas, new partners that want to come in, want to join the initiative, that have ideas of how to promote collaboration, more cooperation. So if you are a Swedish company or a US company interested in context to Sweden, please reach out, because now it's the right time.
And I mean, all of you are, I would say, very sort of innovative, not sort of green tech companies. But how important is sort of the market outside Sweden? How important is that we reach out with all of this innovation and technologies and solutions outside Sweden? Martin?
Well, it's both from a business and from sort of a sustainability perspective, it's absolutely crucial. I mean, the emissions in Sweden it's insignificant from a global context. I mean, I spent 3 weeks in Asia meeting around 40 stakeholders from governments, industry, and all over, and I mean, the challenges they're facing are enormous compared to what we're facing in many aspects. But I also see that by pushing harder in our end of things, we will stimulate change in the other end. And I think measuring or following up on carbon footprints and emissions is, if we stand firm there and we demand of our value chains all the way down to be sort of counted and considered in this. We already now see that, for instance, mining companies in Indonesia, they are drivers of the energy transition, from brown coal and oil, gas, diesel gensets to sustainable solutions, because they want to be a part of those global value chains, supply chains, and they will be excluded if they're not switching into input products with a lesser carbon footprint. So the global perspective is everything.
Perfect. Yeah, I think that's a perfect pitch for what I also was promoting, like how we work with enterprises, right? I mean, if you are committed to reaching net zero, that does not just mean that you look at your own office buildings and say, hey, I have renewable electricity coming into my sockets. No, I have to go through my entire value chain, and I have to make sure my suppliers are on board, or I can engage with them, or ultimately I have to switch them if there's just no way that I can engage them. But ideally, we take everyone on board and have this transition globally. So there are only very few companies who are really producing everything locally, so to speak, in the local context. For them, it might be more regional focus, but eventually I can think of almost no example where you cannot avoid looking beyond your own country borders and having to make this global network work.
If I take it from perspective, it is of course necessary to both do the reduction in every company as far as you can, so you can come close to net zero. But you will never be net zero without also adding removals, and that's more or less a fact. And then I think it's very, very crucial that we can show the rest of the world that it is actually possible in different ways. This is one way, what we are doing, the biocarbon capture and storage. That's one way of creating enormous amount of removals. Only in Sweden we can create 30 million tons of removals. And that will also start a new industry which will create 28,000 full-time job. If we calculate it, we have done it in a thoroughly study, and it will also give the gross domestic product a very high lift. But I think that is example which actually can be followed by the rest of the world. Maybe then not the exact technology will be the technology which will be used in the United States or in other parts of the world. Maybe there is ducts better with direct air and carbon capture. But I think showing these kind of examples is necessary, and there Sweden has a really good opportunity also to show the rest of the world it's possible, and it's possible to do it also with the healthy economy.
Yeah, and to put your 30 million ton into perspective, I think today globally we maybe remove a couple of 100,000 tons from the atmosphere on an annual basis. So if Sweden can go to 30 million ton, that's going to be a big number and a very important number. I was at a dinner yesterday where John Kerry had held a speech, and he was saying that if he would start a business now, really he would go into this green tech area because the business case is fantastic. The need for renewable energy, removing carbon from the atmosphere, all the surrounding solutions to support this journey to be able to reach sort of the reduction or sort of with almost 50% already by 2030. That's only 8 years away. So he was really saying that this is the business to be in, but financing and capital is key. Otherwise, it will not happen. So, maybe one question. This is the Swedish pavilion, and of course, we're talking about it from a Nordic perspective. But how do we attract foreign capital into all of our innovation that we have here in Sweden? Anyone wants to jump on that?
I can start a little bit. I think if we are talking about negative emissions, which I are doing, then there is no market for negative emissions today. There is no real market. How do you trade with negative emissions? The framework and regulation around negative emissions need to be in place. We have it for emission trading system. For emissions we have systems, but we need to have it also for negative emission. A framework which actually gives security both for private companies and also for us as a supplier of negative emission, that we can trade with this negative emission, and that we can do it in a way which actually are crystal clear that we are not greenwashing. We are actually setting up a framework which actually will guide us towards the Paris Agreement. And then we need to have a framework for negative emissions, definitely. And then the financing can come, both from the private part and from the public.
From our perspective, I think it's quite easy to understand why there is sort of a global interest. It's a technology that is, let's label it a strategic energy technology for many areas of the world. So if you take offshore oil and gas actors in Southeast Asia, 10 years ago they would not call a company like Minesto, but now they are, so to speak. And the reason is, of course, that we enable a new natural resource previously unused by mankind. So I think that perspective for us is sort of the key focus moving forward, to blend in the investments we have from the Swedish stock market, the public investments, if I may call them so, with project-based finance at a global scale.
And I think that's, as I see our role also from Nasdaq and the exchange, is really to help inform the global community about all of these companies and all of these projects that are happening here, to be able to matchmake between capital and all of these companies and projects. Verena.
Yes, I would just want to add one aspect. Of course, we have this infrastructure, which is excellent, and we have renewable and fossil-free electricity, of course, which is a major factor. But there's one other thing, and this is more of a soft factor, which I also want to mention, to attract competence and companies, and this is Sweden's goal to be the first fossil-free welfare state. And I speak of the welfare state because all the social aspects of providing good work conditions, the framework for gender equality, for childcare, all these social security factors I think are very important for Sweden to attract companies and their workforce. We shouldn't forget about this strong asset in Sweden as well.
Thank you. I'm now going to ask you a final question. Same to all of you. It's a very easy one. And that is, do you believe that we will reach the target of reducing emission with 45% until 2030? And what needs to happen for that goal to be achieved? No one is... I see Alexander here.
I can give it a shot. I think the first thing we need to realize, being very realistic, we are not on track. We are far off from reaching this goal. That's a fact. There's no way around this. Is it still within reach? Yes, it is within reach. Do we need to make a huge turnaround? Yes, we do. I mentioned this number, you mentioning the number again around commitments, science-based, approved, target setting and reduction targets. We are there. We have reached a certain critical mass of commitments. If they were followed through with the value chains, everything we talked about, we will get there. So we have the commitments. Now it is really about taking the next step, and the next step is taking action. Action can only be taken on basis of information that has to be accurate. So for us, it's the accurate assessment of our emissions, accurate measurements, in combination, also with, of course, accurate assessment of how can I remove parts that I cannot reduce. So I think those two, as we said before, go hand in hand with each other. But commitments are there. Now it's about accurate measurements and actions.
Thank you. I take that as a yes.
Yeah, I think there are many reasons to be really, really optimistic. I don't really think that investors and society has understood how, on what scale this transition is. This is the largest industrial revolution that we've seen on Earth. So what happened, 150 years ago is nothing in relationship to the investments that now are flowing into fixing the systems that are not good enough. And this also means that there will be a lot of new solutions that we're not aware of today that will speed up the transition and the change. And I think that's where the core of the optimism lies, that representing new solutions, not yet in the Bloomberg, trajectories, not yet in the researchers in Stefan Rockström's projections. So that's my source of optimism.
I take this as a second yes.
Yeah. Let me put your question into perspective. If you're asking me, will the politicians in the world be able to actually handle this climate crisis, I will be a little bit pessimistic. Because what I see is that they are voting 4 years or 5 years or 6 years, and they need to be voted. So that is the pessimistic message. The optimistic message I can see is that there are so many global companies now. There are many companies who actually have realized they need to do the journey. They need to do the journey to do the reduction. They need to do the journey to take away also and remove. And we can see it so clearly when we are also talking about negative emissions and also removals. So there is a trend which will be, I think, will be limited by the politicians. The industrial world have started to do this journey, and they can also see the opportunities in this journey where we actually can also create new jobs, new profitability, and in another way. So if I put these two together, I think that the second one will actually be the winner. So from that perspective, I'm optimistic. But that also means that all of us, we need to do our part. And that's it's not an easy road.
I agree, but we have 3 yes. And Verena, you're going to take this home.
Yeah, I really want to say yes, so I'll say yes. But as you all mentioned, that we really need to step up and work even more closely together to make this come true. So let's collaborate and pioneer the possible.
I think there was a very... Martin.
Yeah, I think the consumer perspective and the customer value perspective should be added. If we miss that one, the force of that, we're missing one driver in this. The consumers growing up now, they will demand of everyone producing and offering products that they are sustainable and clean. So it's about doing business to be a part of investing in this transition, I think.
So we have to continue to ensure that we flow capital and reallocate capital into all of this. So really make this happen, and I think it's upon all of us actually to do that. And with that, I want to say thank you for being here early and starting this Finance Day. Very good panel. Thank you very much. Okay, I think we are ready to go. Please, dear panel, come back up. It was the shortest video in history that we just played. It was super good, I agree. Okay, warm welcome to everyone to this second session on Finance Day. But we are going to talk about net negative emission trading, or carbon offset, carbon removal trading and markets. And why is that connected to finance? And my name is Fredrik Ekström. I am president of Nasdaq Stockholm in Sweden, but I'm also chairman of the board of a carbon removal market called Pure Earth, where Nasdaq is the majority owner. And the carbon market is from being almost not discussed 5 years ago to being discussed heavily on a daily basis today. And we can see carbon markets being established almost on a daily basis, especially now around COP. And I noticed that today, I think Egypt is launching their carbon offset market. So I think the market is a crucial component in making the transition into a low carbon economy and society. We need to remove carbon by reducing our emissions, renewable energy, lower consumption, but that we can only reach sort of to some point with reducing. There will be a residual emission left, and that we need to remove. And to be able to remove in large scale, we also need large project, almost industrial scale type of projects. And for that to happen, we need allocate capital, we need funding, we need projects or originations, we need markets that can help with price discovery, transparency, we need regulators with credibility and rules. We need a framework. This market is growing very fast. And I think maybe also one important distinguish is between the carbon market for compliance, which is the ETS market, allowances and caps and floors, trading here in Europe and US, that are there for compliance reasons to incentivize reducing emissions. And then you have the voluntarily carbon markets, which, as the name said, is voluntarily driven activity from corporates mainly today, wanting to compensate for emissions they cannot reduce or avoid in any other way. Today, we only remove about maybe a couple of 100,000 tons of CO2 on an annual basis through the different technologies and solutions we have. We are counting a lot on the natural sinks, forests and oceans, but they will not be able to suck enough carbon from the atmosphere long term. So we need innovation, we need new technologies that can really remove carbon on a large scale basis. And therefore I'm super happy to have this panel with me today. I have Anders Egelund from Stockholm Exergi, and Stockholm Exergi is a traditional utility in heat and energy that are now have a major project in carbon capture and storage to be able to actually sort of transition your normal business into something that is net negative. And we're going to hear more about that from Anders. That's super interesting, and one of the most sort of larger projects we have in Sweden around carbon capture and storage. Then we have Svenja Telle from Base Carbon in the US, who is a program director and work with project origination and funding of many of these projects, like Anders, but others, but from a US perspective. So very interesting to hear about that. But when all of their work is done, when they have produced these net negative emissions at large scale, hopefully, they need to find buyers. And therefore we have Mikael from Climate Impact X, carbon offset marketplace based in Singapore. So warm welcome to this panel. So let's get started. Anders, if I start with you. To do a transformation from a traditional utility into someone that in large scale are going to remove carbon from the atmosphere, what is critical for you and where are you in this journey?
Let me start by saying that we are on a journey. 15 years ago, we were mainly based on fossil fuels in many district heating and district heating companies in Sweden. We have done the journey of reduction. We have done the journey of phasing out coal, fossil oil, and things like that. But then the question raised, we will not be net zero, even if we are doing all the reduction we can. It's so many things which are needed to be removed if we should be net zero. But then we also realized that we have a fantastic opportunity with the same logic that we already have of actually producing heat, electricity at the same time, and then capture the CO2 from the flue gases in a magnitude which is the same as the all traffic emits in Stockholm just from one of our plants. And that's totally biogenic because we only use residuals from the forest. And then we're talking about tops, twigs, and things like that. So then when we realize this, I think we are really a first mover. No one has done this before in this scale. And then you, of course, meet a lot of challenges. You have the technology challenges. I think we have the know-how. We know how to do it. But you have, what I will come to, the financing is a huge challenge. And also, as a consequence, when the financing is a challenge, the framework, the regulatory framework actually sets also the rules for how to finance. And we think that in this kind of large-scale project where we will capture close to 1 million tons of CO2 from only one project, the first project, we need to both have public funding and we need to have private funding as well. And how to set up that? That's a challenge.
Yeah, and I think that the private funding is, of course, going to be channeled through the voluntary carbon market to a large extent. There are going to be other capital being injected in this from bank loans and equity fund and others, but the market can play a role of channeling capital from the corporates, the investors, into your projects. But as you say, how do we create a credibility in the market, a structure in the market that corporates trust, that I know what I'm buying and I know what I get? So Mikael, how are you as a marketplace solving this or helping solving this?
Yeah, I mean, you're absolutely right. One of the reasons why the voluntary carbon market was off to a bad start some years ago was because there wasn't integrity in this market, there wasn't trust. Our whole existence for being, the reason why we created Climate Impact X was we wanted to bring projects to market and help them scale. And hailing out of Singapore, obviously we're focusing a lot on Asian supply, but we are global. Some of the things that I think the market is missing in terms of getting financing into some of these projects that Anders is talking about is a clear pricing signal in the market. A lot of the things are happening behind closed door, OTC. We're hearing bad rumors around some people charging 100% overlay if you're a middleman. So what we need public prices for this, which is transparent and which is strong. That signal will then help the financing come in. So that can happen through different mechanisms. It can happen through, we just executed another successful auction, but ultimately we need to create the benchmarks, even for small scales like that we have at this point in time, and we need the futures market to work. And in a way, that follows other commodities, but we just have to remember that this is not going to commoditize as fast as other things will. And I think we need to be very, very careful as we get there that we pick the right partners. We only bring to market credible projects, because otherwise we're going to repeat the problems we had maybe 10 years ago. And that was a huge failure the first time around.
And Svenja, from Base Carbon, being a project originator and supporting these scale-up, how do you secure the credibility of the project, and what is most important you see from your perspective to scale up these removal projects?
Yeah, I can continue on some of the points that we've already heard. Basically, what it always comes back to is finance and financial mechanisms to make those projects happening. We deal with a lot of technology risk. We deal with a lot of financial barriers for institutional investors to step in. Actually, I can tell a little story. On the way here, we shared the cab with a gentleman who is decarbonizing concrete from India. The technology is there, the scale is there, the demand is there. And I asked him, what at the point of it is your challenge to scale? It's finance. I'm dealing with a lot of consultancies that are working, some of them BEX projects, as I'm scaling the removal technology-based vertical within base carbon, and it often comes back to the same point. It's not financeable. Too much financial or too much technical risk, especially in the construction phase. So what you mentioned, market signals, very difficult. Most of the liquidity of the market is in avoidance and reduction credits. We, from a supply side, from a project originator side, we are working on project finance partially through forward purchase agreements. How do you price those in the removal world? All the contracts that are trading are mainly in reduction and avoidance credits. So as a removal project developer, we have the honor to have negotiations every single year because it's so hard to get a market signal and a price signal. In terms of clear regulations, I think we see a lot of momentum coming back to finance to really tap into the potential of catalytic finance and blended finance mechanisms. Right now, thinking about Article 6.4, the role of carbon removals are currently being defined. How are removals going to play out under the NDCs? How can MDBs work together with private markets to make large-scale projects possible? So there are interesting policy initiatives out there nationally in the US and globally under the Article 6 that I think can drive a lot of momentum into the supply side, which is urgently needed. I can't stress that enough. And finally, the MRV piece is critical. For us, creating the supply, investing and deploying money, having a credible marketplace with underlying methodologies, it's a risk mitigation for us. Because to some extent, methodologies create fungibility in carbon removals, which is currently lacking, which is going to help the market scale, especially in the middle market. The moment there's fungibility created, there's a commodity market. So those are a few thoughts to the question.
Mikael, do you want to add something?
No, I just think, all those points are true. And one of the things that also has been a bottleneck in this market so far is actually getting these things through the process approved and getting credits out of that. So one of our partners, which is also part of Nasdaq, Puro, has actually simplified that process because the worst thing that is happening, and it has happened to some of our project developers, is you know that you have something good, but you are at the mercy of the standards approving your credits. And that can be taking in some projects, especially in the nature-based world, 2 to 3, 4, 5 years. Now that level of uncertainty you cannot have. So the ability to have certainty around when you're going to get your credits, when you're going to get your money, and at what price, of course, is all important.
And you have all touched upon the importance of finance. And we had a panel this morning with a company in innovative renewable energy. And he said something that I think was really important, and that is for these type of projects, and my question will come to you, Anders, if this is relevant for you too, that it is so important to be able to combine public funding in an early stage to take down the risk, because there is a lot of technology risk, there is a lot of investment risk, and then private markets, private funding comes in on top of the public funding in a second stage to really support the investment case for these large-scale projects. So the combination of public funding as a first step to take down the risk, and then private funding to be able to scale up and grow, he saw as crucial. And Anders, my question to you, do you see the same for your biomass carbon capture project, that combo plays a role?
I think the combination of public funding and private funding in especially this innovation project is totally crucial in order to make them fly. We are talking about, as you say, a technology risk. I think we can handle that. We have the know-how there, but you need then to invest a lot of capex. But then you're producing a product which are not market traded. And you need to find a way of how to deal with that from a long-term perspective. For we are not starting to remove for just 1 year. We will remove 1 million tons year after year after year. So then we need to have a credible market, and that can't not just be public funded. It needs to be a voluntary carbon market or something which actually are reliable and credit worthy for the consumers and for the rest of the world, if I put it that way. So I think the regulatory framework around how to set up this trading around negative emission is absolutely crucial.
Yeah, and Mikael, do you think there is a way to copy more traditional financial markets here? If you think about, you have rules for issuance, that could be the methodology that Svenja talked about. You have the marketplace for price discovery, as you talked about. And then we probably need a registry to keep track of all the issue credits, making sure that there is no double counting, double spending, who owns what, and transparency into that. A little bit more like the CSDs within the financial market. So the same structure, but tailored for the carbon market. Could that help the liquidity and the credibility of the market?
Yes, and I think that is what we're trying to build, not we, but the community around carbon markets. It is complicated because in many respects you're dealing with sovereign assets in some of these things. Every sovereign has to figure out how does it meet its NDCs, and at the same time being able to make available to itself some of these carbon solutions. So for many of the countries that I operate in, there is a natural trade-off, or there could be a trade-off. So the registries are being built. There's even meta-registries which are being built to make sure they all connect. But as you can imagine, if you've got to get so many countries onto this doesn't happen as easily as it does in other markets. I think in the meantime, we just got to move on with things. We got to make sure that the mechanism doesn't get stifled by too much of this regulation that will take time. And I think some of the signals that we need right now is, I mentioned auctions before. Let's get some clean, good prices out there. And then I think inevitably we got to have strong forward sales contracts. We got to recognize that if companies want to get into these markets, they got to do it through forward contracts and be willing to take some of that risk, which you wouldn't do if you're just waiting for them to be generated as credits.
And Svenja, we have many companies that are committing to science-based target initiatives. We have many companies who are committing to be net zero by 2030, 2040, 2050. How does those pledges around net zero impact supply of carbon removals?
Yeah, I think coming back from talking about the SBTIs in connection with the IPCCs, it's the perfect world scenario that we need to get to, but also the sad truth is that currently it's not feasible. The VCM is a market-based climate mitigation tool, which is currently not liquid enough. There's not enough supply. And there's a lot of pressure put on corporates because they want to comply to the SBTIs, or I think a very good example was also the Glasgow Financial Alliance for Net Zero. Just throughout New York Climate Week, we saw several asset managers leave the Net Zero Alliance simply because it's often not possible for them to follow the SBTIs or the rules that are demanded, because the sad truth is, where is the supply going to come from? Coming back to the standards and to methodologies and also catalytic finance, thinking about technology risk and developing projects, we often rely on the standards and on methodologies because it's a way for project developers to pull liquidity out of the VCM. The moment there is a methodology under which a project can register, it's less risk for us to deploy capital, plus we have access capital pulled out of the VCM in order to get a project, especially with a high capex in the beginning of the ground. The moment the construction phase is over and the project is successfully creating carbon credits, removal credits, the technology risk goes down and the financing becomes easier through debt finance and restructuring the deal. But especially in the beginning, facing a lot of technology risks, methodologies with the connection of finance is crucial for corporates to be able to even attempt to reach the SBTIs.
Yeah, and within the marketplace or the platform where I operate, Pure Earth, we have created what's called a pre-cork, which is an offtake agreement, which is designed exactly that.
Very helpful.
And now we also attach the possibility for corporate buyers going into a pre-cork, which is an offtake agreement to help Anders' project, to also have an insurance. So there's a partnership with an insurance company called Cato. So the uncertainty you face by committing to something 8-9 years ahead, you can now take an insurance on. So I think there are structure by purely financial innovation that can help really the projects and the market to create certainty for project to scale up before the market is really liquid enough. But one of the things that often are mentioned as we need to improve when it comes to carbon market and carbon trading is the regulatory framework or the certainty. You have raised it, Anders, and Mikael, how do you see the regulatory framework for carbon markets? We now have these initiatives from Integrity Council of Voluntary Carbon Markets called the Core Carbon Principles. Is that going to be the global guideline, or is it going to be local regulators coming in and deciding how this is going to work?
Well, I think if I've given you an answer 3 or 4 months ago, I would have said absolutely yes, it will be. I still think it will be, but it certainly came up against quite a bit of steep opposition. And I think it's natural. If you're trying to do something which is across every single type of credit that exists today, every single registry, every single country, you have a mammoth task, and I don't envy them trying to do this. So there's so many stakeholders to get involved. And the problems that they have is implied in the name. They used to be the task force for scaling, and people were upset that they wouldn't have integrity, right? You need to go through and have integrity. Now they've become the Integrity Council, and then the opposite problem arises. There's too much integrity. We will never be able to scale. Nothing will get to market. Ultimately, if you give it another year or a year and a half, I think this will be, at the methodology level, what we need. However, a lot of the problems arise at the project level. The methodology may be good, the project may not be good. So it's upon people like us, upon people like yourself, that actually make sure that the projects, even if they comply with the methodology, also have integrity in how they are carried out. And that we cannot solve at the level of the standard setters. That is upon each one of us, and there's rating agencies that can help with that as well.
Anders, one problem or one uncertainty that exists is how to do the interpretation of Article 6 in the Paris Agreement. So how are carbon credits going to be traded between the sort of the national registries, the national markets, and the voluntary market? And I have seen many papers coming out the last couple of days around this, and where do you think we are heading with Article 6 and the opportunity for you to tap in both to the voluntary market, which is an important finance source, but also be part of the national market, of course, because Sweden has a target on lowering their emission?
Yes, this is a very relevant question, and it's not easy to answer very shortly on either. But I think we don't believe that anything in Article 6 should be interpreted in a way that it actually is not possible for a nation of counting mitigation outcomes in its NDCs if they are traded on the voluntary carbon market. But however, you have compliance issues, of course, and there are also, to put it explicitly, if there are trading between corporations, bilateral, there needs to be maybe corresponding adjustments. But I think if you're talking about Article 6, and you can talk about it for hours and days today, but I think there are possibilities within that to both have voluntary carbon market and keeping the NDC and keeping the really clear line so that you are only counting for one negative emission in one NDC or in one company. So I don't think that Article 6 should be interpreted in another way, and that's where we are at least. So I think it's possible, but it's need to be developed.
And I would go even further and say, if we break the cooperation between the voluntary market and the NDCs, you will not have the finance we need to scale up. So the impact of an environment will be worse. So how the negotiator in this building sort out Article 6 is super important, but they have to make sure that the voluntary market and the NDCs can work together in carbon trading. Mikael.
Yeah, if I could just add a comment to that. My first point is we absolutely need Article 6 to work, because it's the only way we can create impact at scale is once we have cross-border transactions. But we need to leave the flexibility in the hands of the countries, the host countries. What does that mean? It means that if a country wants the voluntary carbon market to work, we don't need corresponding adjustment. The host country can still count it towards its NDCs, but on the other hand, the receiving country cannot count it. But when a corresponding adjustment is generated, meaning it meets into the compliance market, that's where the real global scale trading market starts to happen. I'll give you a good example. In Singapore, where I'm from, we did something quite innovative. We said that 5% of the carbon tax can be offset by international carbon credits. And so what that means, if it's a corporate in Singapore buy carbon credits, one of these projects, another project, from another country, as long as it gets corresponding adjustment, it can surrender it instead of paying tax. So now what you have is you have an international market going, and of course the price has to be adjusted, because a credit with corresponding adjustment is generally worth more than one without it. But that's how you get a global market to work. So once again, it cannot stifle countries who just want to let the voluntary market go, but if you want this to scale, we got to have an integration between the compliance market and the voluntary market.
Thank you. Svenja, on sort of projects and methodology in your work, where do you see sort of the biggest opportunity for large scale CDR or negative emissions? Where do you think the sort of the holy grail is?
First of all, I love that we are talking about Article 6.4 and Article 6. You just don't get around it. And one thing to add there, I think it's very interesting how markets are converging, what you just said. We see a lot of innovation for accounting coming in, and the climate warehouse of the World Bank. And from a supply side perspective, it's just utterly confusing, because you're talking to corporates, you're talking to project developers. It adds another layer of institutional risk to projects, because you can't foresee how a lot of the countries are going to decide on the implementation of the NDCs. So it's a lot of policy risk. For example, especially in some of the Asian countries, we are more careful now to deploy money there into projects that last for 30 years, not knowing what is going to happen to the carbon credits. Coming back to your question, another very great example where I personally, and I love the question, where I see the holy grail of how to fix all of this is it's a very good policy example from the United States. I don't know if anyone is familiar with the Inflation Reduction Act here in the audience, which is a very interesting approach to de-risking investments into carbon capture technologies. So thinking about a BECCS project or a direct air capture project, suddenly the ROI on the project diversifies into three different things. The first is the carbon credit, which is highly volatile. We know that, the price of the carbon credit. The second one is the 45Q tax credit that is paid out from the IRS in the US for every single ton of carbon that is removed from the atmosphere and either permanently stored geologically. You get $180 per ton. Or for carbon utilization, it goes down to $85, I don't know, especially in EOR, enhanced oil recovery. The third value of a lot of those carbon technologies is the carbon itself. The carbon is a utility. You can use carbon in so many different downstream applications, starting from e-fuels, sustainable aviation fuels, concrete, and I could go on and on. So thinking from a supply side perspective, investing into those sort of technologies where we can de-risk our investment and diversify it, that is where I see a lot of potential, especially thinking about scaling technology-based solutions for geological storage. It's going to take a lot of time to build the infrastructure and the injection wells. On the infrastructure side, it becomes even more complicated because we need to work with infrastructure funds. But short-term carbon utilization and de-risk of the investment, that's where I see a lot of potential. And I always ask myself, thinking about if the oil and gas industry, if it's cheaper for them to inject a ton of carbon rather than to extract it, that's going to fix a lot.
No, and I can agree. What we have seen from the Puro side is really a lot of activity in the US on the supply side since this Inflation Act. And even if me and Anders want Sweden to be the leading provider, I think you can see how policies can really impact. One thing that we talk about sometimes is the compliance market versus the voluntary market. The voluntary market today is estimated to around $2 billion in size, and the compliance market, the ETS systems are, I don't know, $800 billion, something like that. So huge. Mikael, do you think that these two markets will sort of come together as one market in the future, or is it still going to be separate markets? Or do you see you can think about using sort of the carbon credits from the voluntary market actually as a tool also in compliance? Will they come together or will they be separate?
Yeah, I mean, it was back to the innovation I talked about in Singapore. I think necessity will drive them together. I mean, if you get back to the philosophical point, a very real point around solving climate change, you need to find solutions where they're cheapest, where they're most economically affordable. And that suggests that you cannot just be focusing on reducing, you also got to have the new innovation being financed. So unless we do something else dramatically different, you will need to have a market where you can find the money goes to those people who can solve the problems most economically feasible. However, at this point in time, my concern is not so much that the markets won't converge, but that they will be siloed. So for example, it is natural for a regulator in a country to say they will converge within my country. For example, in the EU, we will allow some carbon credits instead of paying the tax, but it can only come from the EU. The US does the same, Southeast Asia does the same, and so on. And then we don't really have a truly global market. But the reason why you would like to do something like that is, of course, you don't want money to leave. But now that we have the NDCs, there is logic for the countries to allow that to happen because they can meet their NDCs at a legitimate way at the least expensive price point. So I think it'll happen, but we need to break a couple of important silos of mentality thinking that I'll just keep it within my own little sphere.
Thank you. And now I'm going to round up with a final question to all of you. And how much do you think we are able to remove on a permanent basis? And I know we can have debates about what permanence mean. Is it 100,000, 10,000 years? But you can make your own interpretation. But how much CO2 do you think we can remove by 2030 on a permanent basis?
2030? 2030. I think our project, we're aiming to be ready 2026. That will be 1 million ton. I expect that there will be at least possibility to capture globally, or do you talk globally? Or
yeah, let's take globally.
Then I think we need to globally be around 100
million ton by 2030. Svenja?
It's a very tough question. I think the amount we are able to capture or remove at the end of the day is a supply problem. Like, it's a logistical problem. I personally come from direct air capture, and I worked throughout the R&D stage of a direct air capture machine. the bottleneck to scaling is often in supply chain issues. Technology is there, finance is another problem, but supply chain it's a very physical problem for scaling carbon removals. So I wish I could follow your suggestion, but I would have it. I would have it realistically.
Mikael?
I don't want to venture a bit. I'll just say if any of those numbers are true, I think we failed. I mean, the gap that we're trying to close is 33 gigatons, and that's by nature and these permanent storage solutions. But if we're looking at 50 million, that does sound like a big number today, we're not solving the problem. We need a lot more than that. So it's a lot more money that needs to go into this market. So it's got to be 10 times that.
Anders?
I agree with Mikael. If we are going to be close to the Paris Agreement's target, we need to have much more reduction, much higher. But when I'm talking about 100 million ton, I'm focusing about permanent removal and storage. And I fully agree. We need to be much higher on a global scale, taking away carbon with natural-based ways, and also with technology storage, like the project we are aiming for. So it's just to calculate the 1.5 target and then go back. You can see it's tremendous amount we need to do.
Okay, that sounds good. Then we have something to talk about next year also. So thank you very much. It's been super interesting, very educative, and I'm really glad that you could share your thoughts with us and the audience here and on live stream about this very, very important market. So thank you very much for participating.
Swedish industry with innovative solutions can accelerate the global climate transition. And we believe also that export credits can actually make such solutions affordable also in other parts of the world, not the least in the developing markets. Welcome to this panel, solving several problems with one system. We have all heard during these days at COP27 how important it is not only to have innovative solutions, but to think in systems. We have to collaborate, we have to stop thinking in silos and act in silos. We have to think in systems. And, and we have come quite far in that sense in several areas in Sweden, not the least when it comes to sustainable transport, energy and waste. But how can we make sure that we can export these kind of systems? And how can we use export finance to facilitate that kind of export? I am Marie Aglert, and I'm head of the Department Large Corporates at EKN, the Swedish Export Credit Agency. And in my panel, I'm happy to have with me Per Larshans, Director of Sustainability at Ragn-Sells, and also the co-chair of ICC Working Group on Circular Economy. Welcome. I also have here with me Maria Simonsson, Head of Sustainability at SEK, the Swedish Export Credit Corporation. And also with us we have from Stockholm 2 guests, and I'm hoping that they hear us now. Yes, there they are. Welcome, Jonas Strömberg, Sustainability Director at Scania Buses and Coaches. Welcome.
Thank you, Marie.
And also Jessica Magnusson, Business Development Sustainable Business at Elof Hansson. Welcome, Jessica.
Thank you, Marie.
Yeah. I would like to start off this panel by a quick presentation from each of the panel delegates. What is your company, and why are you attending COP27 here or digitally? So please, Maria, I hand over to you first.
Thank you, Marie, and thank you for the invitation to participate on this extremely interesting topic. I think it's when we come into the transactions and the solutions that we really understand what the theme of this conference is, which is implementation. So I'm representing SAK, which is a state-owned company mandated to support with finance exporters, their suppliers, but also their customers. We do transactions domestically in Sweden, but more importantly for this theme, maybe also out in the world, where we finance typically large infrastructure deals, energy transition deals into countries outside Sweden. We work with sustainability as a holistic perspective, so green, of course, but also the other elements of sustainability, also the social dimension, the environmental dimension, but also elements of ethics and business compliance. So when we are looking into these kind of transactions, we see not only from a climate transition perspective, but also a line of business that is growing. And we have set quite ambitious targets. We have said that by 2030, 50% of our lending will be going to green enabling transactions. So we really need to see more of these transactions happening.
And Per, who is Ragn-Sells and why are you at COP27?
Thank you so much. Ragn-Sells is a family-owned company from Sweden, originating from 1881. And we are now in the third phase of transforming the company from a waste management company to a raw material supplier and detoxifier, where we use the urban flows as the mine. Especially here we are showcasing how nutrients, phosphorus, potassium and nitrogen can be mined from the urban flows, but also how we can produce much more biogas going forward. And this also will be a theme in today's session, so I'm really happy to be here. And I believe that we are now, I think, in total 16 different sessions where we will showcase that. And tomorrow we will have the show, no, on Friday we'll showcase how we can extract biogas, much more biogas out of the sea. So that will be something to come here to Business Sweden at 11:20 on Friday.
Super interesting. Hand over to you then, Jonas. Start off with you.
Thank you, Marie, and we are very happy to be here from Scania. In short, we are a global manufacturer and supplier of trucks and buses, and all the services connected to keep these buses and trucks rolling, of course. We are present in over 100 countries around the world, and we are very happy to be participating here in COP. Mainly to talk about and discuss how we can push and drive the shift towards a more sustainable transport system, of course. And from Scania, we are quite convinced that we will need a number of different technical solutions to do this, including then both electrification, sustainable biofuels, but also what we talk about a lot here today, biomethane or biogas from waste. And by combining all these solutions for different transport missions, we are quite certain that we can actually achieve the CO2 reduction we need to keep on par with the Paris Agreement. So thank you for inviting us.
Thank you, Jonas. Jessica.
Thank you, Marie. Also, Elof Hansson, I'm very happy to be a part of this panel at COP27. Elof Hansson is a global business facilitator since 1897, mainly traditionally in the pulp and paper industry. What is growing is Elof Hansson International, where we act as a global contractor for sustainable projects based on Swedish technology, know-how and financing. Currently we are involved in several projects. For example, the biggest sub-Saharan African solar park, where we support this park and this project with Swedish solutions. Also railway and water projects in other parts of the world. So while we are at COP27, we already work with sustainable projects. We have a focus, as Maria said, not only on the sustainability, but also on the compliance. And we would like to increase this part, so make a contribution. So this is why we are here.
Thank you, Jessica. Thank you, the panel. I would like to start with a really successful case. And I would like to start in the city of Abidjan in Côte d'Ivoire. That is a fast-growing city. They have a population of 5 million today, and they are expected to grow to 7.7 million into 2030. They decided that to invest in a sustainable public transport system, and they decided to buy Scania high-tech buses and a digital ticket system. They decided to invest in the infrastructure and also training and service. And this was stitched together by the Minister of Foreign Affairs from Sweden and from Business Sweden, and also with the financing. And here the financing was the key. The Swedish Export Agency, together with SEK, the bank, we could offer a long-term attractive financing so that this high-tech equipment could be also available in Abidjan. But then, of course, these buses are now run on diesel, but they could be run on biogas. So I actually asked Scania, why cannot we also export the production of biogas? Why are we forgetting that part of this system? And that was the starting point for discussion. How could we think in system and also export system? And how could we use the export finance system in making this also affordable in other markets? So before a discussion, I am happy to invite Scania and Elof Hansson from the Business Sweden offices in Stockholm to do a short presentation of what such a system could look like and what is happening in Sweden. So handing over to you, Jonas and Jessica, please.
Thank you so much, Marie. And we will start by giving you a short introduction to what a sustainable transport system powered by biogas from waste is and how it can be implemented.
Right, and as you all are aware, we are facing a number of tough sustainability challenges, but two of the most tough ones are actually transport and the problem with landfills. And when it comes to the transport sector, of course, we are responsible for almost one fourth of the emissions coming from greenhouse gases, and also in the growing cities, this is an enhanced problem.
And also when it comes to the waste, 90% of the world's organic waste ends up at landfill sites, having a lot of impact on the climate, environment and littering to the sea. But most of all, the leakage of methane to the atmosphere that stated in the ISVA report, the International Solid Waste Association, that this will actually contribute to 10% of the world greenhouse gas emission by 2025.
So adding these two together, we can see that almost 1/3 of the greenhouse gas emissions will come from these two problems. And that's why we are happy to be here to talk about one way of addressing that challenge.
So to give you a little background, why are Sweden capable of export this system? Over the last 50 years, we have been working to improve our waste management in Sweden. Today, we have less than 1% of the waste ending up at landfill sites. The key where we make the turn was when we actually realized that waste can be turned into valuable. Waste is a resource. Together with policies and regulations such as landfill tax, this is one of the key for our journey. Jonas?
Right, and so what do we do with this waste now when we don't put it in landfills anymore? Right, we actually turn it into one of the most sustainable transport fuels there is, biogas or biomethane, which is something we will talk a little bit more about. We have come so far now in Sweden that actually over 95% of the gas in our vehicle gas system is now biogas, then replacing fossil natural gas.
And then how have we done it? How does this biogas system looks like? What we have done is that we have redirected the organic waste streams from landfills, sorted them out and put them into a biodigester to produce biogas. That is
right.
Yeah.
Exactly. And once we have that biogas, we can then upgrade or clean that biogas, if you like, into what we call biomethane, which is almost pure methane. And that we can then use to feed our fleets. And we do this mostly for heavy-duty fleets because the investment in infrastructure is much lower here. So buses and trucks mainly. And when we operate our buses and trucks on this fuel, we can see that we have very, very high CO2 reductions, sometimes even more than net zero, because we are both reducing the emissions from the methane leakage from the waste, while we at the same time are replacing then fossil diesel or fossil natural gas in the fleets.
And in addition to this, there will also be a product that you can be used as a biofertilizer, to use that instead of fossil fertilizers and other chemicals. But still, on other markets, landfilling is the main disposal for waste, and the landfills will still be there and have leakage of methane gas for at least 30 years, 20-30 years. So what we will do in this model, we will also like to capture the methane gas from the landfill sites and turn this into a better environment. Use this gas as, for example, cooking gas and electricity. And if you take one example, the African continent has a huge need of clean cooking solution, and this could be one solution.
Right, so this is a great system, and as Marie mentioned, we are glad to say that we have a possibility now to export this as a complete system solution from Sweden. And starting, of course, if you look at the green box, we start always with a very thorough pre-study where we will outline both, what sort of a sustainable transport system will have to look like in the local setting, but also what will the waste to biogas system look like in this local setting. So this pre-study will produce really a bankable project plan, if you like. And then when it comes to the implementation, we are quite happy then from Scania side to take full responsibility for implementing the whole transport system with all the supporting structure we need for that, service, backup, but also a training academy to make sure that everyone is well-trained, drivers, mechanics and fleet managers alike.
And from Elof Hansson's side, we will take the facilitation and implementation responsibility for the waste management system and the biogas to vehicle fuels for Scania's trucks and buses. And we do this together with the Swedish technology providers.
And of course, we are very happy to see also that we have financing as a part of this package from our friends at Team Sweden, EKN and SEK. And here, when we talk about systems, it's really important that we now can sort of finance both the waste and energy system and the transport system. So really connecting these two dots.
Yeah, and both our companies have a long history and a very good relation with these actors as EKN and SEK. So this is also a possibility for making this financing model come true.
Key for enabling financing, of course. And when implementing this, it's really not a difficult technology, but still there needs to be a capacity building program all the way, and that is also included. And like the pre-study, this is also to 100% supported by Team Sweden. And within this capacity building, we will of course include also on-site training here in Sweden for key people who will actually learn how to run and operate biogas and waste operations. But also on-site in the actual city or on the actual market, we will also do local mentoring to make sure that everything will be running smoothly. And when you implement biogas systems, we like sometimes to call it the Swiss Army knife of sustainability because you get so many benefits out of it. One key in this also, when you combine these two, getting out of the silos and combine waste and transport, is that you get almost a bit of a perfect match. Because a public transport system will consume basically the same amount of fuel for a long time. So they are a perfect uptake who can make a long-term agreement with the biogas producers for maybe up to 20 years for actually taking all of the fuel. And then, of course, it will be a lot easier to invest in this biogas production because then basically you have no risk. You know that you will sell your product for a very long time. And for the operator of the buses or the trucks, they will have access to cheap, local and clean and very sustainable fuel for a foreseeable future, which makes planning a lot easier.
And there will of course also be many additional benefits. We will not go into them at all. But you can, in short, you can say that working with a holistic system approach on this kind of system, you actually work towards all 17 SDGs. And we also hope that the Paris Agreement and Article 6 could be one way of having additional financing for system delivery.
Absolutely, and just finally saying that this is actually a system, if implemented correctly, that can actually achieve more than net zero emissions because we remove so many emissions from the whole chain. And we know that this is possible because we have done it in the Nordic countries, but also elsewhere for quite a long time. So we are sure that we can make this happen everywhere. Thank you so much for your attention.
Yes, thank you very much.
Thank you so much, Jessica and Jonas. And first of all, I'm so impressed because we have a long cooperation also from EKN's perspective, the Swedish Export Credit Agency, working with these two exporting companies, but in different sectors, but all around the world. And EKN, for example, we do business in 146 countries. But this is the first time that I see these two companies coming together, realizing that the cooperation will be key to succeed. Fantastic systems, and I hear also financing, and of course financing has been what everyone has been talking about during these few days. And how can we make sure that we can have affordable financing solutions also to countries where they have difficulties finding private capital for these kind of investments? What can we do from Sweden's perspective, Maria?
So, I'll try this one. Yes, much better. Use this one. So I think that perfect presentation of, I think, what we have realized for the past years, actually, not so long ago, that what we're about to do is to enable systemic change, which means that we cannot only look at maybe a transaction from a pure product perspective, not even a solution perspective, but realizing where our products and solutions make change in systems, and that the systems will be changing, and realizing what systems you're changing might need different solutions. So I think that's a key takeaway from this transaction, that if you look at it holistically, you might actually solve different needs in one transaction. And I think from a finance perspective, we have been, for all the hundreds of years we've been in business, we've been quite geared on transactions, but now this systems perspective is offering completely new types of deals and new parties coming together. So I think working with it from this point of view is something we need to do much more of. And I can just say from an SEK perspective, which is similar to EKN in terms of working with these two companies, being active in 60 countries, we want to be flexible in these kind of deals. Typically, we have a threshold of 30% of Swedish content going into a transaction, but we would like to see ways of financing the broader system solution. So that's where we're working with partnerships. We're very active in the ecosystem, working together with EKN very closely, but also the international banks, which has also these perspectives increasingly into their financing. And then we can get a true financing enabling of the transition, I think. So we have to see much more of these holistic systems approaches, but also being aware of what kind of systems we're actually looking into. Some of these elements actually work into other systems as well, such as agriculture, such as food production. This was a clean transportation, affordable transportation project, but I'm pretty sure that you can have other spin-offs of this kind of system thinking as well.
Thank you. And I would also like to add on that export finance is an underused tool when it comes to financing investments, not the least in emerging markets. And it's a fantastic tool since it's backed by the government. It's attractive in terms of pricing, but it also crowds in private capital, and I think that is key. So there's a lot of potential, and if you would like to learn more about export finance, what it actually is, I would recommend you to come to the next panel discussion here at Business Sweden. I would like to turn to you, Per, and now when you have listened to Scania's possibilities of fossil-free logistics, what is your comments from your perspective?
I must say I agree what has been said here from the stage. It's a perfect way of how we create new circular flows. We need to collaborate. Two companies coming together, and Scania really taking the responsibility for making sure that they also can power their trucks with biogas going forward. So I must say I'm impressed, and I hope that we can be a part of that collaboration going forward, because here at the COP we are now presenting how we can collect fish poo, fish sludge from the sea, enabling to produce more fish. But what's more interesting is that huge amount of energy in the form of biogas. So I think maybe in the future we'll need to find a partnership on 3 here if we're gonna also add on the fish farming potential going forward. So I'm impressed, Jonas, and I wish you the best of luck, and if we can support you in any way, we'd like to do that.
And I must take the opportunity, since you are also co-chairing the ICC's working group on circular economy. What is, could you just shortly describe the focus and the work from that group at the moment, and looking more on a global perspective?
Yeah, when it comes to the global perspective of circular economy, we see that there are huge needs. Because when we now go into a new transformation where resources are more scarce, at the same time we need to have new and other resources. We need to find them already in our ecosystem. And that will also demand a change in legislation. because today it's barriers of trade to be able to use the resources in many cases. And that's the reason why ICC now on a global level has set a working group of circular economy, enabling that we have the legislation that enables business to also support the transformation. And I believe that the finance sector needs to understand this. It's not an ESG question. This is about raw material supply. And I don't know if you do your risk assessments and understand the consequence. Where will you supply in the future? Where will you take your raw material? What are the risks? And we see that definitely now when it comes to the situation in globally. And just mention one thing is, of course, in this case, phosphorus. This is a phosphorus that we have extracted and produced from sewage sludge. That is the highest quality you can find on the market. But we're not allowed to sell it. At the same time, we see huge challenges for many in the food industry to be able to source food going forward. And of course, that will create, I believe, many companies to go bankruptcy and investments, of course, to disappear. So I would say that we need to integrate the circular economy thinking also when we analyze how much money should we lend out and to what type of companies.
I can just comment on that I think it's excellent how the ICC now and the platform that you have actually chairing that working group. I think it's an excellent way of showcasing how Sweden can take lead in establishing a circular way of thinking. So strong supporter of that. And just a comment to what you just described from a risk perspective. I think that sustainable finance, which we're engaged with in the finance industry, it's one thing about the risks. That's what we're here for, to take calculated risks. But what we increasingly see is that to evaluate the future business model, you have to understand a company's ability and proactiveness in creating new sources of growth and reducing the risks of maybe being dependent on a raw material that you cannot source in the future. So risk and opportunity goes very much hand in hand, and companies that take lead on that will attract better financing. So that's a super strong strategic element.
And another risk that I see now is that today we try to measure the consequences of the global warming and the CO2 issue. The thing is, when we price it in the materials that we also use, then we will have an even bigger problem. And then suddenly recycled or origin will be much cheaper. Or then comparing to virgin production. So then do we understand the consequences? I don't know that. I don't believe so. And I think that we have huge challenges to really understand the big consequences for the economy, for the real economy, when we talk about future sourcing.
Time is starting to run out, but I would like to ask one final question to each of you, and that is, what is the single most impactful action your company is taking on climate right now? And who would like to start?
A single one?
Single one.
I think it's the Estonian project where we are setting up a way to use carbon dioxide as an input, in this case to produce PCC. Normally you grind it, you mine it from limestone, but we are using ashes that have been stockpiled there for almost 70 years, and we add it with CO2. And that becomes a product with a carbon negative emission.
Wow, super interesting, great. I will continue with Jonas. What would be the single most impactful action Scania is taking?
Oh, there are several ones, but I have to mention one, right? So I will then say that we are quite rapidly transforming our portfolio of vehicles into sustainable vehicles and also commercial sustainable vehicles, which is really important. I mean, we need to outcompete diesel in the cost per kilometer of operating, and the only way we can do that is, of course, to change the portfolio. But technology is really not the issue. It is also these partnerships that we are talking about together with fuel suppliers. And if we look at the bus side of Scania, where we are spearheading this development a little bit, we could actually very proudly say that from 2 years back, We sell more vehicles that are not diesel. So we are actually selling more vehicles that are sustainable products operating on electricity, biogas, or biofuels. So we have so far managed to make diesel the alternative fuel, which we think is a key step forward.
Thank you. And Jessica, from Elof
From
Hansson.
our side at Elof Hansson, it's actually the projects, what we are daily working, what we are doing in the projects, supporting renewable energy projects worldwide, and of course this kind of collaboration that we have started strategically with Scania is also very important to have a good impact on the climate.
Fully agree. Thank you, Jessica. And finally, Maria.
Yes,
what
and
is
I would echo the only one topic. I think it's a bit complex, the transaction and the transformation we're running. But if I would single out one, it's quite inspiring to see how the core of your business, assessing and risks and analyzing companies' future plans, how that is the single most important thing you can do for enabling this transition. So I would say our core business, developing that, speaking and engaging with our customers, enabling and helping these kind of solutions come to life. That's the single most question right now, which we're working extremely hard to get even further on, and which we will continue to work even further on with our customers.
Thank you. With that said, time is running out, and I would actually like to summarize this panel in the same way as I started. It's fantastic. Swedish industry has great innovative solutions that can actually accelerate the global climate transition in the whole world. We need to get this technique out there in the world, and we believe that financing from export credits can be one tool of making such technology affordable also in countries that are facing challenges, economic challenges. Thank you all for listening. Thank you. And thank you all. Swedish export industry with innovative solution can accelerate the global climate transition, and we believe that export credits can make these green investments affordable also in emerging markets. We know that by 2030, emerging markets have to sevenfold their investments in green solutions. We also know that emerging markets are facing massive funding gaps. We must find all financial tools available. And one such tool is export credits. Export credits can make green investments affordable. In this panel, we will discuss what is export finance and how can it be used to accelerate the green transition. And I'm Maria Aglert from the Swedish Export Credit Agency, and with me I'm honored to have the General Director of EKN, Anna-Karin Jatko, welcome, and the CEO of Exergi, Magnusson. I also have Justin Henriks, the Head of Sustainability at EDC Canada. And also, I'm delighted to have two panelists digitally. And I hope you are there. It's Hussein Sefian, who is CEO of Aglert Impact Capital. Are you there? Yes, yes. And also, I'm welcoming Daniel Aspenberg, Vice President and Head of Treasury at Volvo Cars.
Hello, thanks a lot.
Yep.
Happy to be here.
Well, export credits, there has been a lot of talk that this is a tool that can be used in financing the needed green investments. But what is export credits? And I would like to turn to the CEO of Exergi, Magnusson, if you could explain for us what is export credits and how can it be used in this transition towards the green.
Sure. Now let's see, can we hear me? Does the mic work? Yeah, so, thank you, Marie. So yes, I represent the Swedish Export Credit Corporation. And we work with export credits together with EKN. We are a provider of finance, and EKN is a provider of financial guarantees. What is an export credit? Basically, it's a financing of a buyer of Swedish exports. So when we have Swedish exports going out to international markets, EKN and SEK, we together offer financing solutions to these buyers of Swedish goods, technology, services, whatever it may be. Why do we do that? We do that in order to make the Swedish export content more competitive by offering attractive financing terms. When I say attractive, in what way? Typically it's long tenors, so maybe up to 18 years. Competitive pricing because it's guaranteed by a AAA guarantee from EKN. It is also so that when we do export credits together, we have very high sustainability standards. So coming to your second part of the question, how do we help financing the green transition? So not only are we providing finance, we also set very high sustainability goals and standards for the projects that we are involved in financing. And we do that with a complete perspective. So all ESG related aspects, not only the environment, but also social and governance. So in brief, export credit is financing of buyers of Swedish export in this case. Benefit, long tenor, attractive pricing, high sustainability standards.
Export credits can actually be to support the export, but also beneficial for the buyer because we can offer longer tenors and better terms. Yeah?
Yeah, absolutely.
Then another question, we often come in pair, SEK and EKN. So what is the difference? Would you like to answer that, Anna-Karin Jatko?
This one is really very simple.
In order to offer attractive, available and accessible finance, you need a bank, SEK, and you need an insurer or a guarantor, EKN. So we effectively insure the risk that some of these type of financing can entail. So that's the brief answer. I think between us, we've been in business for 90 years. I know that SEK celebrated 60 years a few months ago. We have obviously then, for those of you that are fast with your numbers, we have 140 years of joint experience. EKN, we cover export transactions to 146 countries, which means that we've been doing this for a long time to many, many markets, and we believe there's a bit more to be done. So Magnus, would you like to add something?
No, but absolutely. I mean, we work hand in hand. We're not in quite as many markets as EKN, which is the point that Anna-Karin wants to partly make. We are in 60 countries, or 62 countries to be exact. But we are a bank, and that's an important difference as well. So we are regulated by the financial services authorities as any other bank. We are financed by the capital markets, so through bonds in various currencies, and but in that way we complement each other very well. That you have a risk cover and a financial or funding provider, basically.
So, as I was introducing the panel, we see that export finance can be a tool in financing the green transition also in emerging markets. How is that done, Anna-Karin? And perhaps you could also give an example where export finance has been used for green investments in an emerging market.
Yes, I think a lot of the talk today and at COP27 is clearly about financing and different type of financing. And what we're able to do with export finance is that we're able to crowd in private capital. So just a concrete example that we have worked on together is the largest solar project in sub-Saharan Africa. We all know that solar energy provides clean and renewable electricity, and in this particular project it actually provides electricity for 2.4 million people in Angola. Angola is Africa's 7th largest nation, growing very quickly, but also, as we all know, very reliant on fossil fuels. This will also, apart from providing clean electricity for 2.4 million Angolans, it will also significantly decrease Angola's emissions and increase their share of renewable energy. This type of financing is advantageous for Angola. It's advantageous for the Swedish exporters, but as we all know, it takes a village to raise a child, and in this case it takes a lot of collaborations between different actors, and I think that's the key point of this project. Not only have we cooperated as we often do, but we have reinsured with our Korean colleagues, K-Shaw, because all these large projects often requires goods and services from many countries, so ECAs needs to be cooperating more. So we've done this with our Korean colleagues. Naturally, export credit is about crowding in private capital, and in this particular example, we've had part of the financing package is the South African Development Bank. So you have that part of financing. We've also had a number of commercial banks partaking, the lead bank being the Dutch bank ING. So I think this is a very good example where it really underlines the needs to collaborate in order to ensure that these financial packages happen. We attended a panel together that EKF, our Danish colleagues, were just running, and one of the things that came very clear there is the fact that we need to speed up the transmission, the transition, and this particular project, which is not that common in sub-Saharan Africa, only took a few years, and the project is already producing electricity to the Angolan grid. So yes, we need to scale up and speed up, and I think this is a good example where that actually happened. From a Swedish point of view, we're obviously here to promote Swedish exporters. Not only does it include world-leading technology in electricity transmission from Hitachi Ludvika. You may think that's a Japanese company. It's also a Swedish company in the sense that they have production facilities in Sweden. We also have a large number of Swedish SMEs participating in this transaction who may not be used to exporting to Angola, but SMEs is a key factor when it comes to providing innovative new technology. So they were also part of this transaction through a Swedish trading house called Elof Hansson, because somebody needs to coordinate the SMEs. So all in all, I think this is a very positive example where we've all collaborated in different fashions, and I'm sure there's a lot more to be done when it comes to collaboration with different parties in order to ensure that these projects are happening in developing countries. Thank you.
Thank you, Annika, and I agree. This is a great example where you have Swedish technology being available in markets outside of Sweden. But to be frank, we don't see that many cases, and we know that export credits can be used to a larger extent. And I will now turn to Hussein, who... Are you there?
I am there. Can you hear me?
Oh, yes, now we hear you. Thank you. Thank you. I would like to turn to you because I know that you were also involved in ICC's white paper on export credits, and where you identified export credits as being one financial tool that could be used to a larger extent. How could we use export credit to a larger extent? What is your view on that?
Sure, and it's a pleasure to be here, and thank you for inviting me to this really interesting conversation. Maybe just to set the scene a little bit, and I just want to give a perspective of what export finance looks like in the context of other pools of capital. And the export finance industry supports about $200 to $250 billion worth of financing annually, which is roughly equivalent to what the development finance institutions and the multilateral development banks deploy together in any given year. So it's a very large industry, and what's interesting is that most of that financing is flowing to emerging economies, usually economies that struggle to access commercial financing. That's a unique role that export credit agencies play. And this role was really recognized by UNEP-FI, the UN Environment Program Finance Initiative, which basically stated that export credit agencies play a really important role to channel SDG financing flows. In particular, have a role in promoting the export of capital goods to developing countries. And they see their role as being indirect and acting as a catalyst and an enabler of investments, especially in countries that are perceived to be high risk. So I think it's important to note that, you know, it's a very large industry, and if you think about the public pools of risk capital, export credit agencies play a really important role in sort of ensuring that financing flows to some of the more challenging countries. And I think one of the important points to highlight as well is that export credit agencies see the role as filling market gaps and encourage the participation of the private sector, in particular private banks, in export credit transactions. And these gaps usually come from two reasons. One is the private sector's reluctance or inability to take on certain risks, so in particular medium and long-term risks in certain countries, or the private sector reacting to market cycles, in particular when there's an economic crisis. So for instance, during the 2008-2009 financial crisis, we saw many of the banks reducing their appetite in emerging markets and really coming out of many countries in emerging markets. But interestingly, export credit agencies increased their volume significantly, and were almost acted as a counter-cyclical pool of capital to support these economies. And we saw that again at the beginning of the pandemic, where Again, private capital has withdrawn from many economies, but export credit agencies ramped up support and volume to support projects around the world, and obviously green and transition related projects. So I think export credit agencies play a really important role in terms of crowding in private finance towards, in particular, developing economies.
Thank you, Hussein. Before this morning, actually, I was listening to a panel by our Danish colleagues, the Danish export credit institution EKF, and Justin, you were also in that panel, and you mentioned your collaboration with the private banks, which I thought was very interesting. Do you think you could comment on that, please?
Absolutely, would be happy to, and thank you for allowing me to join the panel today. So yeah, the question that I was answering on the Danish panel was at Export Development Canada, a lot of the work that we do is done in collaboration with the private sector, the Canadian banks. I'll add to the spirit of the competition between my two colleagues, where interestingly enough, they have their two organizations that work in collaboration. What's perhaps different at EDC is we have the guarantees, the insurance, and the financing all under one roof. So I guess we all wear many hats, and this is how we engage with the private sector. So the collaboration that you were referring to is through some of the innovative products that we've launched in the Canadian marketplace. We've done it in partnership with the banks. So one of those products was a sustainable finance guarantee. And what's been interesting is we launched it as a pilot with one of the major FIs, Bank of Montreal, and we are in the process of signing up with two more Canadian institutions, and one of them is actually looking to bring that solution more in the commercial space, so more towards the medium and small enterprise. So we're really curious to see the data that we're going to collect, actually how the FIs are going to roll out a sustainable finance guarantee, because there's definitely reporting requirements and data requirements. So it'll be interesting to see how Canadian entrepreneurs are set up or not, and how we can really support them in that process as an example.
Would you like to comment on that?
Yeah, no, I mean, very interesting to hear, and maybe just comment a little bit about, how we're working when it comes to green and sustainability-linked products at SEK. So at SEK, as a bank, we have a whole range of financial products for the exporters, their suppliers, and the customers overseas. So we talked about the export credits that are relevant for the buyers, but we also have direct financing to the exporters. Working capital and long term and so on. All our different loan structures, we can have them as green, in line with the EU taxonomy. And then they qualify under, so qualifying economic activity under the EU taxonomy. And we can use those assets when we then issue bonds within our green framework. So that's an interesting structure. And then outside of that, we have sustainability-linked loans. So these are loans that are not in line with the EU taxonomy, but they are linked to the company's strategic goals for either reducing CO2 emissions or becoming more energy efficient. And then we can brand those loans as sustainability-linked as well.
Thank you. And turning back to you, Justin, now we are talking about the ECA support for the green projects. But how do you balance export credit agency support for green investments with the wider ENS implications?
No, great question, and really glad that you asked. So I would probably start off by saying that it is so important for us to play our part in terms of the transitioning and being there for exporters and also the buyers. But having said that, I think not substituting that for good ESG due diligence, I think is key. And what I mean by that, if you consider considerations such as human rights issues or better understanding the risks that are related to supply chains, there's a real opportunity as well as ECAs, I believe, to make sure that as we're supporting some of these international projects, they are done so in terms of the right approach and with the right impact in mind. So you think, I know in our previous panel, we had the wind industry represented, I think solar came up. and we know that there's definitely some strong issues that need to be resolved. So there's a way with our due diligence where we can act almost as an influencer or use our leverage, being an export credit agency, for some companies that are operating in these sectors, either to improve or enhance their approach in terms of how they manage their suppliers, and also even within larger projects to bring the overall standards higher, either respecting more international approaches or even some that are related to associations that are trying to advance those issues. So it does come hand in hand. And I must say, with the experience that I have, sometimes they are for tough conversations, right? When you have to come back to the table and be able to have the conversation with the exporter. But I would say, though, in most cases than not, the exporters, having gone through the exercise, are not only a lot better equipped and able to be more successful, but they're so much more informed. And I would say that's probably the best part of the reward we get back, is when having to go through that, they're able to give us that feedback that gives them more confidence in operating in international markets.
Thank you, Justin. Now, I would like to go back to our the project that we, Mrs. Anna-Karin Jatko from the Swedish Export Credit Agency mentioned earlier in this panel, the solar project in Angola, where we were pleased that we could support with export financing together with the South African Development Bank and together with other export credit agencies. And now I just got the information that I'm pleased that Mr. Gisa Gaspar Martins, the National Director for Environment and Climate Action from Angola, just took the time to join our panel. You are so very much welcome.
Thank you very much. Thank you. Thank you. Thank you. Firstly, I think I need to start by apologizing for the tardiness in arriving here. It has been a challenge.
Oh, can you hear me? Again, yes. I must say we fully understand that you are in discussions and a very hectic situation during these days of COP27, so you do not have to excuse. We are so happy that you could join us.
Thank you so much. Thank you so much. So I'm not sure how much you have been told about the project, but I think it is a story that deserves telling here and in other places, as it symbolizes what is possible to realize climate action objectives. What we were able to do with support, of course, from the Swedish Export Credit Guarantee Agency was we were able to finance approximately 380 megawatts of solar projects across 5 provinces in Angola. Those projects were, of course, originated out of the need to significantly improve access to energy in Angola, which stood at 42%. This project helped take a bite, about 10% bite in terms of improving access to energy. It also, of course, increased the percentage of electricity that's generated in Angola utilizing renewable energy, which is at the end what we want to do. It is a good story not just because of the export credit resources that would put at the disposal of the project, but the fact that we were able to procure technology that came from various places, including, of course, Sweden, South Korea, and other places. But I think that the cherry on top of this cake is that it is a project that was born out of our National Strategy for Climate Action and our NDC. In our NDC, of course, derived from the National Climate Action Strategy, we submitted to the convention that we were going to reduce carbon intensity in electricity production. And we were going to increase the percentage of renewable energy that is produced in Angola to 70%. And this was announced by the President of Angola at COP26 as we presented our revised NDC. And thanks to this project, we are about 70% there in terms of achieving the NDC target. And so I think, again, sorry, and I'll hand over now, but it is a good story to be told because it takes the guidance from the national strategy, identifies potential financial instruments that can be deployed to further its implementation, and we managed to get it done. 3 utility-size power plants are now inaugurated, and 2 are under construction. And thank you very much, Swedish Export Credit Guarantee.
No, thank you, and thank you for sharing those perspectives. I actually have a question for you, if you don't mind, and thank you for joining the panel. So I'm Magnus from SEK, the bank, and Anna Karin is the guarantee provider. So we work together, and it's a super project for so many reasons, not the least that the financing package played in bringing it about. But I want to ask you a question about the business perspective. So the need from a transition and environment perspective is very clear. But we have together, EKN and us, we have a climate council where we've invited 4 renowned scientists from faculty in Sweden that help us and guide us as we develop our sustainability policies. And they're very clear in their guidance, and they say that sun and wind generated power is the cheapest source of electricity that exists today, as long as there is sun or wind in the country, irrespective of whether there is fossil related fuels in the ground, such as gas and oil, which is the case in your country. So could you comment on their guidance in this perspective? So they're saying sun and wind generated power is the cheapest. How have you found that from an Angolan perspective?
So I'll do 2 things. I'll comment, but I'll add something. The sun and the wind, and the sun even more, they're not just the cheapest. It is what makes the most sense. Because for a country like Angola, that is of significant size, it's the 5th largest country in Africa. You can deploy through solar technologies, through photovoltaic, you can deploy production capacity where it is needed, minimizing the need to build transmission lines and things of the sort. So we really like solar. Now, Angola is a oil-producing country, but Angola does not consume most of the oil that is produced in Angola. Angola is committed to renewable energy for domestic energy consumption, and I mean, I will share that following our project, there have been subsequent announcement of new projects. So we've now tested the formula. We like it. There's an MOU for a $2 billion project on solar energy that is under development in Angola. So we've now tested it. We like it. In terms of the relationship between renewable energy production and fossil fuel production in the country, that is an issue in which all of us have to play a part. We are committed to renewable energy for domestic energy production. There are interesting ideas and projects coming on stream when it comes to electric mobility to address the power of the transport industry needs and so on. But as long as there is demand in the world for oil, the temptation will be there to produce it. But let there be no doubts that in Angola we are committed to renewable energy, in particular for domestic production. And not just that. I mean, yesterday, so there is a Southern Africa power pool initiative that has been functioning for a number of years. Through the ability to deploy technology such as solar, whose costs of investments have come significantly down over recent decades, we will be able to add renewable energy to the Southern Africa power pool, which will also, in the end, have an impact on the carbon footprint of the electricity sector in the region. So we'll do our part, and we all have to do it. And the fossil fuels are a matter that needs to be resolved by all. Yeah, intended.
I also have one question actually to What we are trying now to increase the use of export finance for this kind of project all around the world. Therefore, I would like to hear your view. What are the benefits of using export credit for such a project, from your perspective?
So, one of the determining factors in terms of doing climate action, not just in Angola, anywhere in the world, is of course the availability of the means of implementation. We can have a beautiful policy, but we can't access the finance. If we can't access the technology, we're not going anywhere, even if we don't have the capacity. Now, a number of instruments exist in the finance world that can be deployed for the implementation of climate action. In this case, and particularly because it's a mitigation type activity, export credit made sense. But there are other activities for which there are other climate policy objectives for which export credits may not be the right instrument. Most adaptation projects that end up providing public services, public goods to a population, or protect a coastal area, or invest in improving the resilience of small communities, export credit is not the solution for. But for power in particular, export credit can play a role, and our project proves that it is possible. So much so that we are using the formula and applying it to other projects.
Thank you. And yes, of course, and export credits has their challenge itself, since export credits are also regulated. And we see also a need for some easing up of the regulations so that export credits can be used to a larger extent. Now we are talking about the benefits from a buyer's and an importer's perspective, in Angola in your case. But of course, the reason for export credits existence is also to support exporters, and in our case, to support Swedish exporters. And today we have one company called Volvo Cars. And Daniel, are you still there?
Yes, I'm still here.
Yeah. We're all here also for the reason to support you, and Volvo Cars is of course a company that is driving the transition, and also transport industry is going an immense transition. So from your perspective, what is your view on export credits, and what would you like to see more of from the export credit world?
No, very good question, and I think that before looking ahead, I think that just to begin with, I think that we have had a cooperation with EKN and with the SEK for decades, basically, and I think that that's a really good, strong foundation to build upon now. Also, when we are to start looking into the future to a larger degree, and how we are to then jointly make sure that we, and together with our supplier base, can move forward when it comes to this green transition. And just to highlight a bit of the background and what we have and where your support have been really valuable to us in the last couple of years. It was first in the initial phase of the pandemic, where we did not know really how it would turn out. The support that both EKN and SEK supported to Volvo Cars at that time was really valuable to us, so that we really could take that as a good foundation and then start looking forward to a larger degree. And then to Magnus' earlier point also, when it comes to SEK's green financing efforts, I can also announce that, or basically mention that we earlier this year also entered into a green loan together with the SEK. So we are very much working on this together as well. But in my view, I view this only as the starting point, because the big changes, they are the ones that are to come right now. Because as you allude to, the transformation sector or the automotive sector is standing just in the beginning of a huge transformation in going fully electric, and basically making sure that we have a more sustainable supply chain. Because what we all realize, or must realize, is that the automotive sector is part of the problem, and now we also must make sure that we becomes part of the solution. And in this area, I think that your continued support and commitment to this transition will be absolutely key in order to not slow down this entire process. because this transformation will require huge investments, whether it comes to investments in new gigafactories for producing the batteries needed in the future battery electric vehicles, or when it comes to producing new green steel initiatives, for instance, in order for us to reduce our scope 3 emissions, basically. And also, not least, also how we can increase basically recycling and increasing our circularity going forward. Also in that space, it will require huge investments. And I would say that especially in these times when the financial market is becoming a bit more turbulent and maybe not as attractive any longer, then I think that it is even more important for you to basically be there to support this transition, to be able to provide the guarantees and help support the funding initiatives, so that the other commercial parties feel comfortable in basically handing out credits to us and our suppliers and the other actors in this sector. Because if you do not, I believe that there is a high likelihood that this entire transformation will take longer than it really needs to be.
Thank you, Daniel. Would anyone like to comment on Daniel's perspective? Before I round up this panel, I would like to ask the audience whether is there any specific questions that you would like to take the opportunity to ask? Yes, please.
Thank you. Very interesting to listen to different cases. I'm advising private and public entities in Latin America, so I'm learning from your experiences. And I'm really interested in these credit exports for making available the Swedish technology. But you made reference to different credits through private banks, which I don't know if are concessional or not, which means that they keep with the market costs, and therefore they do not really reduce the risk inherent in implementing technology in new landscapes and countries, which is something that developing countries will face. So therefore my question is if the Swedish credit experts are also considering making credit type of concessional to make really available this technology, so the Swedish technology companies can sell the to the private and investing in developing countries and emerging countries.
I think that's a very, very good question, a question that we often get actually. I don't know, Annika, would you like to answer that question?
I'm going to start, and then I believe I may be contradicted by you. So let's get going. The simple answer is that export credit financing is based on crowding in commercial capital. So what we add to the table is the fact that export credit on a global scale is about $700 billion on an annual basis, which, by the way, is equivalent roughly to the aid available on an annual basis. So we will not be offering concessional guarantees or concessional loans because we are regulated by an OECD agreement which is trying to ensure a level playing field so that we don't start competing with what is really non-sustainable financial offerings. So this is really long term, but it's on a commercial basis and it's regulated internationally to ensure that what seems like a good financial package at the end of the day turns out to be something that's not. And ECA financing is. So perhaps you'd like to add to that?
Just a little bit. The truth is that it would be great if and it is actually a matter that is at the center of the discussions on finance under the convention. It would be great if we could do all we could to get as much concessional finance lending as we could. But let's not forget, export credit is but one instrument. And its impact cannot be looked at only as if it was the only instrument. In fact, it is not. And it does reduce the risk that a commercial banker would have to lending to a particular country, and ends up freeing resources in the borrowing country to do other things. So we must look at export credit as a part of an ecosystem of products and services that are not enough, are not doing sufficient, but when appropriately chosen, do make a difference. Thank you.
Yeah, and I think actually the solar panel project in Angola is a very good case. You wouldn't have had a private bank. In this case, it was Ingbank, the Dutch bank that was leading this transaction. They wouldn't have lent on such long tenors. There is no private bank that would do that. But since the risk is covered by the Swedish state in this transaction, they could do that. So that's how you get the private banks involved, because they don't have the risk. So they should also lower their price in that sense. And in the case of Angola, we collaborated with the South African Development Bank. So you have to add different types of sources, and I think that is a key challenge really for the future of export finance. Please, Magnus.
No, but absolutely. I just want to agree with what the Minister said. I think it's the key here is the collaboration and to get different sources of capital directed in the same direction. And you need to think of what is the role of the export credit system in the respective country is to support our export industry and to drive the transition. And in our case, we believe that those two are very much aligned, because Swedish products and innovation, they help the transition in other countries. And I think the point made about freeing up capital out in these, let's say in the developing countries for investments into innovation is really well made. Then a challenge for us is to think of how can we direct more of our financing locally in Sweden to help the Swedish exporters to innovate, try untested technologies and so on. And that's something that is top of our mind and that we're working towards. And Anna-Karin and Marie, they have a green guarantee, for example, a green domestic guarantee, which can be made use of, to help investments in such more kind of new, not venture capital, but technologies that are under development that other banks, local banks, might find it difficult to finance.
Would you have a comment on that, Justine? Please?
Yeah, maybe to build on what you're trying to do. So in Canada, so at EDC, actually it was back in 2012 as an example where we identified clean tech as a critical sector for not just Canada's future, but the world and how we had to transition. So it gives you an idea of how long it takes, right, and our involvement. And part of the reason we stepped in collaboration with the private sector is because the banks were not willing to take that early technology risk, right? So this is where we were able to come in domestically, either through a guarantee or sometimes direct lending as well, to be able to support the industry. So you look back at today, 10 years later, we've supported about $20 billion in the clean tech industry in Canada, which is not enough. So we know that if it took us 10 years to do 20 billion, we know the pressure, how fast we have to go this time around in terms of the transition. But the other part of it too, maybe to underline not just the role that we play, but how you need to bring others along. When I say this statistic, I say it with a bit of a twofold. We're very proud at EDC that we still remain one of the top financiers of clean technologies in Canada. But I often follow it by saying that that's a bit of a sad statement. Because if you think of the opportunity and the power that the financial markets have, so the other role that we end up playing is to try to bring them along to as well better understand those sectors or their early sectors from an innovation point of view, and to bring those private sector dollars. So it's an example where we need to continue to play that role and to actually bring the private sector along.
Thank you very much, Justin. I think that was a very good final words, and I think we have to sum up this panel. And I think we can sum it up that we all realize that export finance is a tool among others, among several other tools, but we have, at this time of the moment, we have to collect all tools available and act now. And with that said, I would like to thank you, the audience, for listening to this panel. I would like to give a special thank you to Mr. Gisa Martins for taking the time to join our panel. Thank you also Anna-Karin, Magnus, Justin. Thank you Daniel, and thank you Hussein, who are also with us from Sweden and London, I believe. So thank you very much. Thank you all.
Thank you.
Thank you.
Hello. Very welcome to all of you to the Swedish Pavilion and to this event on green financing in Egypt. And very warm welcome to Anna-Karin and Magnus from our export credit agencies and company, to Dr. Sopke from General Healthcare Authority, and to our friend Dr. Sinna from Ministry of Environment. I think we have a very timely subject here to talk about, green financing. It's financing day and we are in COP27, and climate and greening is what we are talking about here. We also know that there is a strong interest in Egypt from the Swedish business community. And in the pavilion here we have more than 20 Swedish companies present here. We also have our Minister for Trade and Foreign Aid here today and tomorrow to explore the opportunities for further cooperation between Sweden and Egypt in many different sectors. And I think the presence here of Dr. Sopke and Dr. Sinna are two of the really key sectors that we want to work with and that you want to work with also. So this is a very good occasion. I think that I will first ask Anna-Karin and Magnus to come up to the stage and say a few words about the work you do and how you can help with the green financing. And then we will have a few comments from Dr. Sinna about this, and then we take it from there. And of course, Dr. Sopke, if you want to say a few words, that would also be very much welcome. So thank you. I think we start with Anna-Karin actually. Please, the floor is yours.
Thank you. Thank you very much, Ambassador. First of all, a big thank you for hosting COP27. I think we're all discovering some of the magic of Egypt, and anybody who's ever studied any history is clearly very taken back to see the real pyramids. So thank you for this opportunity. Now, I believe that you didn't only want me to talk about the virtues of Egypt, but possibly to add a few words when it comes to export finance and why it may be of interest. Magnus, my colleague from the Swedish Export Credit Corporation, and myself, we tend to work as a team. And this may be a bit of a duet, we shall see. But just in terms of export finance, what is export finance and why may it be of interest? And this is the key question we're going to try to answer, hopefully jointly and shortly. Starting off with export finance, well, it goes without saying that the aim of export finance is to ensure that Swedish goods, services and technology can be used on a global level. It also comes with the virtue of being an attractive form of finance, and when it comes to increasing the speed of climate transition, that's why we're here at COP27, financing is obviously one of the key subjects we're looking at. There are a lot of discussions on this subject, and one thing we really want to highlight at this panel is the fact that export finance is a very effective tool when it comes to long-term finance. It's accessible, it's affordable, and it's available. Export finance on a global level is the equivalent of $700 billion. We have a very substantial amount of Swedish export finance available to ensure that the possibility to finance some of the many, many investments that need to take place in a number of countries is actually going to be possible. So the whole point of this intervention is to highlight Swedish export finance. And on that note, Magnus, tell us more.
Absolutely. Thank you, Anna-Karin, and thank you, Håkan, for the invitation. Can you hear me? Yes, I can hear myself. So maybe starting off by saying a few words about SEK, the Swedish Export Credit Corporation, so you understand how we fit together. So Anna-Karin, she's a provider of financial guarantees. SEK, we're a state-owned bank. So we are regulated in the same way as any other bank by the FSA. We are fully funded by the capital markets, so we give out a debt on the capital markets, debt instruments, bonds, and that's how we fund ourselves. We have a balance sheet of about $30 billion, and a big part of that is financing that we do together with EKN, so backed by financial guarantees from EKN. We finance Swedish exporters, we finance their suppliers, and we finance, most importantly for the conversation today, the buyers of Swedish exports overseas. So a big part of our balance sheet is directed internationally to the buyers. Why do we do that? We do that to increase the competitiveness of Swedish exports. So when we do that, working closely together with EKN, we also set very high sustainability standards for the projects that we're involved with. So we follow the IFC performance standards, we follow the OECD framework, and we follow the UN guiding principles when it comes to international trade, project finance, export finance, and so on. What we often find is that the standards that we set are higher than the local standards in the countries where we do financing. And we see that in a way as a positive thing. So we contribute to setting higher standards in these markets, often in developing countries where we're involved. I mentioned that we have a balance sheet of about 30 billion. We have set a target in SEK that by 2030, 50% of that will be to green financing. So it's a little bit less than 10% today. So over the next several years, we will very much direct our activities towards sustainability financing related projects. And we see that Swedish exports have a very important role to play in the transition, not only in our own country, but internationally as well, in several different sectors. Just to mention a few: energy supply, transport and logistics are two that are highly relevant to the transition. And there are others as well. But just to mention a few where we've been quite active in the developing countries. So maybe just to sum up, it's about financing and it's about setting high sustainability standards, and those two linking together.
Just a few words of EKN. You've already figured we work together. We have guarantees in 146 countries. We've been in business since 1933. And I think one of the very many interesting projects we've been doing in sub-Saharan Africa lately together. We were in a panel not that long ago with the Angolan chief climate negotiator. And the reason we were on the same panel, which may not seem like an obvious panel to some of you, was the fact that we have together jointly financed the biggest solar panel project in sub-Saharan Africa, in this case in Angola. And this was one way of ensuring that our role is also not only to, of course, support Swedish exporters and technology transfers, but also to crowd in private capital. And this particular example, we worked together with the South African Development Bank. We worked with a number of commercial banks, NIG being the Dutch bank, being the lead bank. We worked with our Korean counterparts, because as we all know, when it comes to large infrastructure projects, you often need goods and services from a number of countries, and of course locally produced as well, which we also cover. So I think it's a very good example. It's also a project that helped ensure that 2.4 million Angolans have access to affordable energy, solar energy, fossil-free energy. And this project, which, you know, some of us may feel, oh, these projects takes a long time. They may take a long time, but we just don't have the time anymore. And this particular Angolan project just took a few years before it started to deliver electricity to the grid. And I think if it's one thing we realized being here, and I think we knew that even before, is that we need to scale up, we need to speed up, and we need more collaboration.
There are several things that I would like to add, but Mr. Ambassador, would you?
Yes, I think this was a very good introduction, and of course there are many more things to say. You mentioned, Magnus, a couple of sectors that you're working in. One sector which we find extremely interesting is the health sector. And the health sector is also, I learned in another seminar yesterday, responsible for about 5% of the carbon oxide emissions. So that's, from that perspective, also an interesting sector to work with. Maybe you have some experience there?
Yeah, no, absolutely. I mean, the health sector is a segment where, again, we have several successful Swedish companies that are expanding out into the international export markets. And in fact, we've had an example of a deal or a project that we've done together, which is in Ghana. Where we have financed a hospital and a maternity ward in Ghana, together with a financial guarantee from EKN and financing from SEK. So, health sector. Another important one is smart cities, waste to energy, where we have also several interesting examples of Swedish content and Swedish solutions.
Thank you so much. I think perhaps it's time for an Egyptian perspective on these things. So, Dr. Sinha, maybe you would like to start and make a few comments on microphones are available.
Your Excellency, thank you very much for the invitation, and I'm very happy to be with you today. Thank you very much for the introduction. And indeed, it's a very important issue for us, financing and green financing. And I just would like to go for the Egyptian context that we already finalized and launched our national strategy for climate change. And the good thing that we came out with more than 127 national projects ready for investment. And from this 127 projects, we put priority for 26 projects. We designed it out of this 26 project a program called NWAFI, Nexus between energy, water, and food. So, and then transfer this to a more conceptual papers and projects. And yesterday there was a signing ceremony for more than 10 billion dollars for a specific project. I would like to highlight this important story that is showing how this is the future for green financing. Egypt launched last year the biggest green bond program in the Middle East with more than $750 million. And by the way, I would like to thank you very much, the embassy, for the training that have been done for the Egyptian ministries. It was very excellent and very helpful. I would like to thank you for your effort for organizing this to build the capacity for the local staff on how to work on the green financing and designing in the green financing. But I will go back to what the idea for the main concept for this seminar, showing that Egypt is looking with a very ambitious investment plan, green investment plan, to attract more investment in this sector. This morning there was an event opened by His Excellency the Prime Minister. It's in collaboration with the Green, with the GCF, Green Finance Fund, and the workshop was just to release investment plan for the national strategy for climate change. So now we are just moving from the environmental concept to investment concept, and by the end we have economical, environmental, and social benefits to our country. So this, I'm happy that we are just announcing this. We'd like to learn from you, but we'd like to ensure that our commitment and in our strategy to move forward with green finance, and this is a very important topic for the Egyptian government, and also showing cases for other countries how we can really move from just the what we say conceptual phase to the implementation phase. And now we are in the COP27. It's an implementation COP, so it's a high priority for us, and I think my colleague also from the healthcare and other sectors, they are really releasing and they are facilitating all the opportunities for this green investment, which will be the future. So I hope this is something that we could be continuing through other challenge with Egyptian, Swedish investment. And I would like to thank Your Excellency for this, as you are also have a financial background. So this is something very good, and you are lucky for this. And this is in brief that I would like to ensure how this is very important, and we are keen to be here in this small side effect. Thank you very much.
No, just to comment on that. So, I mean, clearly we are here to, support Swedish exporters into the Egyptian market. As Anna-Karin was alluding to, there are several advantages with the export finance system. It's long-term, it's attractive pricing, and so on. Maybe three kind of guiding principles for when we get involved. So the first one is it needs to be bankable risk, so we need to be obviously comfortable with credit risk, something that we look at. The other one, which I mentioned earlier, with high sustainability standards before we go into a project. So that's the second one. And then the third one is Swedish content. So a rule of thumb there is that as long as it's at least 30% of Swedish content in a project, then we will be happy to look at it.
Thank you for this, and it's a very important also to refer that there was a decision on the cabinet level for a criteria for sustainability had been approved by the cabinet, that all national projects has to meet all the standards of environment by 2030. I mean, this is something called the greening of our national budget. So no more budget will be pledges to new projects until they are meeting the requirement of the environment. We reach right now more than 35% of all projects are green, financed by the government, but our target by 2030 to have all the project financed by the general budget must meeting this environmental sustainability criteria. This has been introduced by Ministry of Planning and the Ministry of Environment jointly to the cabinet and has been approved. So this is just meeting, as I studied in Sweden, meeting the criteria of the Swedish context, and of course we hope this is also our Egyptian context to meet together, because the environment is now, it's not the issue of just a luxurious issue or whatever. It's a must, it's a challenge, it's issues that would like all to react. So what is doing here in Egypt should be the same doing in Sweden. So I think it's a more be equal standards worldwide. We have no other choice, by the way. Thank you.
Thank you. Thank you. Hello? Yeah, thank you so much. I'd like to give the floor to Dr. Sobki now, also to broaden the Egyptian perspective even further. Please.
First of all, I'd like to thank Swedish Embassy in Cairo, and a special thanks to our friend, His Excellency Mr. Hokan, Ambassador of Sweden in Egypt. And thanks to Anna and Magnus from Eken and SEC, and the Swedish Expert Agency. And a special thanks to my colleague, Dr. Abu Senna, Deputy Minister of Environment in Egypt. And I'd like to thank you to choose, or for choosing this very important issue, which is green financing. And actually in Egypt, we started our journey for healthcare reform. And this healthcare reform is very important for all the population in Egypt. And actually we started our ambitious plan for universal health insurance by renovation of all hospitals and primary healthcare units in Egypt. We started gradually to implement the project, and we are now in 6 governorates. But we have now, as my colleague said, we have now the intention and the political will to transform all the investments in all sectors, and healthcare in the heart of these sectors, from traditional financing or from traditional investment to green investment. So that this issue is very important for us. And actually I was in Sweden a month ago, and I have the proud to meet some colleagues from Swedish export in Sweden, and I know the ambitious plan for them to have more and more cooperation in Egypt. And actually we are now ready for this cooperation, because we have a lot of areas of cooperation in terms of waste management in the green way, the environment-friendly hospitals, and we have also the opportunity to announce that we have now the first green hospital in Egypt, in Sharm el-Sheikh. And if you have time to visit Sharm el-Sheikh hospital, it's a green hospital. So that we have the intention and the political will to transform from the traditional to be green. And with your assistance, with your plan for green financing, I think you will boost and accelerate the process of transform our hospitals and our equipments in our hospitals, and also the policies and procedures from the traditional way to the green way. So thank you so much, and we are ready for this cooperation, and we have endless opportunities to transform all hospitals from traditional way to the green way. Thank you so much. Thank you, Your Excellency.
Thank you so much. And we have a lot of things to do together in both health sector and the environmental area. I will not. I think we should try and round off, maybe, because all of us has other events to attend to. But if Anna, Karin, and Magnus has some final comments on your side, there is a small window for that.
More cooperation, speed up, scale up, I think is what we all need to be looking at. And obviously the Egyptian goal of very rapidly ensuring that transition happens is something that we share, and I know that Dr. Senna. And so I think we are aligned when it comes to understanding what each party can bring to the table, and that's what I just like to highlight, that cooperation is the key to transition. Thank you.
Just to emphasize on that, I mean, if we think of all the successful projects that we've done together, what's the key factor of success is collaboration. Collaboration between us, the exporter, the buyer, commercial bank, local government. It's the only way to go. So collaboration is key for us to be able to deal with the challenges of the transition. Thank you very much.
Thank you so much, all of you attending, and thank you, of course, also to the panelists. Thank you.
Now, good afternoon, everybody. Welcome here to this session. So happy to have you here and so happy to be here. My name is Katarina Wagner-Björk. I'm with one of the partner companies of the Swedish business delegation, the Economy. But I'm specifically at this session also a moderator, and I have a wonderful team of panelists here, which is a bit untraditionally diverse when it comes to backgrounds and sectors, and that is why at Economy and from my previous background from also various aspects, collaboration is key to get us moving, and we won't find the solutions if we don't collaborate for real, with real different perspectives. So we're going to discuss collaboration for climate innovation, mitigation and inclusion. Whatever that is something that we're going to explore together. And I would like to introduce the panel, or rather let them introduce themselves. And in a broad perspective, please tell who you are, where you're from, what you represent, and also what is your take? How can you use your platform in order to create climate inclusion and innovation in a broad sense? We'll dive deeper into it as we go. Much welcome.
Okay, I can start. My name is Fredrik Ekström. I'm president of Nasdaq Stockholm, so the exchange in Sweden. I'm also head of global carbon markets for Nasdaq. And our platform consists of 5,000 listed companies worldwide. All of them, of course, I would say are on a journey to transition into more sustainable business, sustainable finance. And our role is really to see how we can support that journey, helping them raising capital to invest in the sustainable transition, but also create, I would say, awareness, dialogue, and help explain to investors what many of these very innovative companies do to really support the future. And then in addition, of course, we as a global company also support a lot of technology and innovation, and within the space of ESG and environmental, there is a lot of, I would say, the need for new markets. So we are trying to see how we can support by building new markets, for example, in carbon removals, and also how we can support allocation of capital into new markets and new companies that are trying to drive the sustainable agenda. And then, of course, as a company, without sort of thinking about how we can help our customers, we as a company also want to walk the talk and do the journey and become a better company when it comes to inclusion, diversity, and also set our own targets for ESG and climate. So we have a job to do, but we also want to help our customers.
Thank you.
I have my own mic. My name is Milton. I work for the Swedish impact tech company, The Economy, that is also hosting this session together with Katarina. I am running our innovation lab together with a couple of brilliant colleagues, and The Economy at large is a very innovative company in everything that we do. So our entire ecosystem consists of innovation that are trying to achieve climate change mitigation and engaging essentially everyone who have the capacity to move the needle in a wide array of ways. And I think we're going to delve deeper into what we do, but I should also mention where I'm from. I'm living in Stockholm, Sweden, and that's where we're based.
My name is Craig Leeson. I am a filmmaker and an explorer. I'm from Tasmania, which is the most beautiful place on the planet. If you haven't been there, you should go. I make impact films and documentaries. My company makes all sorts of documentaries, but it's the impact environmental films that I'm most interested in terms of creating awareness and moving the needle globally on the way that we think about the biggest issues that are facing all of us. And for me, that's single-use plastics, biodiversity loss, and the climate crisis. I directed and narrated a film called A Plastic Ocean, which was released in 2017 and was the #1 documentary on iTunes, Amazon and Netflix 3 weeks after it was launched. It was the first documentary to look in depth at the single-use plastic issue. We traveled to 21 countries around the world and took teams of scientists and gathered data and research. And initially it was a film that started out as a marine documentary, but it became a human health documentary once we discovered how pervasive this product was in the food chain. And that film took 8 years to make because there was such a lack of information. We had to keep traveling to find out more about it. We've got a new film which is being released right now on IMAX called The Last Glaciers, and it is what it says on the tin. It's about disappearing, or as we say in the film, dying glaciers all over the world. What glaciers mean for human survival, what they, the role they perform as life support systems, and what it will mean not to have them anymore, which we probably won't by the end of the century from the research that we've done. And so we then take that awareness, and I talk to governments and corporate leaders all over the planet about what we're seeing on the ground and the kind of science that we're finding, and give them a visual on something that they can't see firsthand, and talk to them about what it means for them as a corporate leader or as a political leader, and how we need systemic change as a fundamental solution to solving many of these problems.
Thank you.
Thank you. So my name is Hanna Gran and I lead Spotify's climate action work. So we started off really focusing on, having our own house in order, taking down emissions, and that's more tricky than you can expect being a digital company, because there is really no clear pathway. So that has been super exciting to understand a bit more. What does it mean for more and more digital and streaming companies to actually reduce their own emissions? But of course, we want to focus, just like you did, how can we raise awareness? You mentioned there are visuals that you want to, people that don't see it themselves, that if you can convey that, we want to do the same but with audio then. So can we actually reach out to the 5% of the world that uses Spotify across the world? If we can reach out to them and make them feel something and hopefully take action and understand more, that's very much our focus. And I'll dive into more what it means.
Thank you so much to dive into. And we start with Fredrik. You said something about how you enable the green transition. I'm specifically quite curious about how you move on with supporting new markets. I thought that was a quite interesting thing to dive into, because what we can see is that we have a lot of businesses searching for new and creating new categories, creating new markets, seeing a lot of opportunities, whereas sometimes you could really see that governments and the like paint or politicians paint the picture quite black, which it could be, or melting. What kind of opportunities do you see, and what kind of opportunities do your companies see, and how do you support?
If we start with why building a market? What is the purpose of a market? And to me, the market serves as a tool to help suppliers, in this case, suppliers maybe of solutions that help withdraw CO2 from the atmosphere, or suppliers that have some innovative technology around renewable energy that can help sort of take down the emissions in the atmosphere. But those suppliers, they need a couple of things to be able to really scale up. They need financing, they need capital, they need help to maybe find the buyers of their products. It will take too much time for them to go out and search for buyers and to search for investments and companies. And that's what the market can do. It can really help the sort of reallocation of capital for those who want to invest in that type of activity and those who are seeking investment. And then the market also create, I would say, price transparency. It helps with creating price points, which is crucial for any investment decision. It helps with credibility, that you trust what you buy because there is a certain structure or framework around the market. So I think that is the purpose of a market. There is no point putting out the market unless there is a need for it. But I think when it comes to renewable energy, CO2 removals, and these type of new markets, new challenges, we can help from our perspective using our, I would say, experience and capabilities in building markets. And then, of course, we have this huge, maybe not your network, we cannot reach that many, but we can reach a lot of investors and companies through our network that also then can sort of we connect the capital into the suppliers of these important things. So that's really how I see our role in helping new markets being born and grown.
Thanks a lot, thanks. You have a lot of commonalities when it comes to creating awareness, transparency, enabling people to take action. Milton, how does the economy work to enable climate literacy, if you will, knowledge and insight, awareness?
Yeah. Does this mic work well? This is the one you used, yeah. Well, I'd say that having an ambition to enable climate literacy is in the DNA of everything that the economy does. So we could mention any service really in our ecosystem, and it would speak to the ambition that we together as a company hold. Perhaps just to underscore that sentiment, we can mention the recently launched 2030 forecast, which we did together with a French partner of ours, Kairos, which is enabling people to see the carbon emissions on each nation or to each country on a weekly basis, as opposed to a much longer stretch of time. So we're using satellite data that's provided by, for instance, the European Space Agency to track with 7-day intervals how each country is developing in terms of their carbon footprint. And so for an individual who's trying to understand what the climate question is about, one could, read the unequivocally clear IPCC report and get an understanding of it, of course, but science can, tend to be a little highbrow, and it can tend to be a little hard to digest. And so what we did with the 2030 forecast was we put that country emissions data on billboards in Stockholm, London, and New York. Most recently at Climate Week in New York and Times Square, where a lot of people are passing by. And so that's one attempt at achieving climate literacy. Those billboards are now going to be put in every pocket as well. So it's going to be an app that's available for free and sponsored by corporates, yet to be identified corporates. So that's one thing. I'll stop there.
Thank you. And Craig, people have watched your movies. Either it's in respect of being individuals, citizens, business leaders. How do they channel, if they got this sense of urgency and awareness through your film, how do they channel their engagement? How do they go from being emotional, touched, and got the new insights and knowledge? How do they move on?
Yeah, so engagement, you create awareness through the films, and that's all about great storytelling and the language that you use. And it's important that you use language that everyone can understand. I think that's a big problem that we have with a lot of documentaries, particularly on climate, that we saw, was that they were regurgitating the science, and the science is so dense on climate and so varied, it's really hard to understand. And if you have a scientist regurgitating in their language, your eyes glaze over in about 10 minutes. So what we do, and the skill that we have, and what my number one policy is with our documentaries, is that the script has to be understood by an 8-year-old. If an 8-year-old can understand it, an 80-year-old can understand it. If they can't, we've failed at what we're supposed to do. So we translate science into a language that everybody can understand. That's important because policymakers are no different to anyone else. They're not scientists. So if they don't understand what the science is telling them, they can't act on what they need to do to take that awareness to engagement. So getting engagement is critical to that, is being able to explain in an engaging way what's actually happening. And engagement we don't stop at engagement. I then take what we've learnt and go and talk to these people, sit down one-on-one and explain to them what we've seen and how it made us feel. To your point, you mentioned emotion. It's important to get emotion because emotion brings empathy. And you really can't get, even a finance minister won't give you money unless he feels empathy in some way to your cause. It may just be purely financial, but it is empathy on a level. So it's important to be able to really communicate properly in what they need to do. So we work with governments and corporate leaders around the world, helping frame a pathway for new legislation. So we help Mexico, the Senate, frame new legislation on single-use plastics. I've worked with the Attorney General in Colombia on issues of biodiversity loss and single-use plastics and helped them look at what other countries are doing so they could plug and play. And that's something that's very important, as well as demonstrating to everybody that these methods work. And so we kind of provide ourselves as a conduit for what we're seeing around the world and go, maybe this will work in your country or for your company.
Maybe just a comment on that. I mean, even if we live in different worlds and have very different jobs, I fully agree, because no one is willing to invest millions unless they understand what it is. And some of the things we have on the plate now in terms of climate change and innovation and new businesses are super complex. So if we can't explain it, we will get no funding into it. So I fully agree. It's so important to make it understandable, also for a guy like me and my community.
Thank you. Thanks a lot, Hanna. So looking at your industry and also talking about awareness and emotions, but through audio, how do you see yourselves cut through the noise of information and get engagement going in these issues?
I mean, I think it's so interesting that it started off and promised that this was going to be a diverse panel. It's not, because I totally agree with exactly what you were saying, and especially the word storytelling, because that has been our kind of North Star the past year as well, looking at how can we leverage the platform, because we really started off with more science podcasts. If we just present the science, everything will be fine and people will act, and we have managed to do this. The issue is that we already have tons of science podcasts and other materials. The issue is just getting people interested and feeling the need to actually start to look into that in the first place. Because then, if they are interested and feel that empathy, then you also start to take actions. So we have been exploring that a lot, and it both comes down to what we present to listeners and documentaries and so on, but also where. So we have been experimenting a lot with not having it in... we do have information also in climate action hubs and so on Spotify, but also going to music festivals, not with climate conferences, but just regular music festivals and adding it. So we were there the past summer in one of Sweden's biggest festivals, and then we had it on the hip-hop stage. We inserted climate talks here and there. So things like that is exactly what we want to do, to actually reach the people that needs to hear it the most, because you have the around 10% of people that already are super interested and listen to it. Then you have the 10% denials that will never be able to convince, but the 80% there in the middle, how can we get them interested? And then storytelling is everything.
But it's not easy, is it? Because A Plastic Ocean, when I wrote the script, it took me 6 months going backwards and forwards with the scientists, because I wanted to make sure in the translation the science was right. And they would say to me, no, you can't describe it that way. We have a word for it. And I'm like, look, I know you have a word for it, and I know you've studied a long time to understand how to use that word, but you're the only person, you and your group, that understand it. So we need to take that word and we need to break it apart and actually find out its meaning and use the meaning. So the translation isn't an easy thing to do. I mean, it takes a long time in order to get the accuracy of the original authors of the work.
I agree, and we were lucky enough so if you join us tomorrow, you'll hear a bit more about it, but we actually tried out the format this summer, so it's called 2072, so it's a podcast which is like climate science fiction, really. So it's based on science, worked together with scientists, but then we gave it to 3 famous Swedish writers that they wrote a story about 50 years into the future. How does that society look like? For example, no coffee. That's one of the things that everyone keeps coming back to. And that's also how you actually make it engagements a little bit more close to home. But we were lucky enough to actually have a scientist who had worked with scenarios in the past and also science fiction. So he knew the importance of actually conveying in a good way. But he said it's very, very few other scientists that has the same view. So I think both the kind of creative community needs to go and have more of a scientific understanding, but also scientists needs to have more of a creative one and sometimes understand it is a little bit of a compromise to actually get it out there. Yeah, I agree. But interesting that you mention it.
That's so interesting. I just an anecdote. I was here at COP my first time 25 years ago as a youth delegate. And a few years after, I got a consulting commission to do a simulation on the carbon trade that was discussed and promoted by the Swedish government at that time. And it was done through doing simulation in form of a giant board games on the floor to understand what is the interplay between the different actors involved in carbon trading. From governments, from local governments to civil society, NGOs in various places around the world to businesses. It was really interesting because it created an understanding among the decision makers here. So they actually got back to the negotiations and changed what they wanted to do because they understood that the language here doesn't play or carry the meaning that we wanted it to do. We need to change. So it's an interesting tool. Fredrik, how do you work with, do you create emotions in your daily work as an actor? Do you work with creating emotions or creating a common language when looking at green investments?
Of course, everybody loves finance, don't they? No, the problem is when I listen to all of these 3 is that I see I have a problem because I stumble into this all the time. For example, when we come into complex things that you explain, for example, our carbon removal market as a standard, a registry, and you lose people. You have to make it more appealing in terms of creating the, if not emotions, at least understanding what it is and why it's important. And it is something that is important not only for me in my role as sort of an exchange, but I would say for every company listed on the exchange, it also is important because if investors don't understand what they do, they will never be able to raise capital long term. So again, it comes back to being able to discuss and explain very complex things in an easy, understandable way. And I have a long journey there to learn more, but it is super important.
And I just have to actually stand in your side of the ring there, because what you have done is really, we talked about how and where. You've actually added it to where people are and just exposed them to this information in the beginning. Of course, it's difficult to understand it, but just that it is there as part of the market, I think that's a huge win and will help to change a lot. So I think you should have some praise for that.
Milton, going from awareness and climate literacy, is there anything more needed? How can you create engagement and actual action that delivers results? Because that's what we need now. We need implementation, we need to come further, we need to reduction with speed. What is needed beside? What can the economy add to it?
I think that's a highly complex question that I am not sufficiently capable of answering in full, but I can attempt. And I think, first of all, I feel like the commonality here is that each party is trying to pierce through the white noise of everyday life, where people have so much information to consume and such limited time spans that you need to do so efficiently. You need to really get to the point. You need the hip-hop stage, you know what I mean? And so, like you were mentioning. And I think the economy's ability to enhance climate literacy is there, but I think in addition, getting on that reduction journey is highly complex. I think one of the initiatives that is important is, well, I should say thematically for us, the key in sort of most of our services is commercial incentives. And if you're a person living in the Western world and you're trying to understand how you are disproportionately over-consuming, you're engaging in conspicuous consumption, you need to move to sustainable consumption, you're displacing entire communities because you want to buy a new thing, to be honest. Like, there are a couple of ways we are attempting. Our ambition to change that lies in a couple of, I think one of them, I think you have on your promotional slide for the last glaciers, you have the lifestyle calculator that we developed. An extension of the lifestyle calculator that we developed is called Restore. We launched it this summer. And Restore takes the carbon footprint of each individual, identifies the blind spot that a person may not know that they have in terms of their transport footprint or their home footprint, for instance, and each individual gets recommendations on what products and services to switch to consuming instead of what they're already consuming. So say that you have, a high transport footprint and you're flying from, Sweden to Egypt for a conference, like there are alternatives to getting here, right? And the same would apply if you have, for instance, a high energy footprint at home because you have a fossil fuel energy provider. Within Restore, you could switch your fossil fuel energy provider to a renewable energy provider. And so I think incentives are crucial to that end. That's just, one way to achieve some form of reduction, but it's a complex question and I don't claim to know. That's why we're all here.
Yeah, it is a complex question. I want to go to Fredrik to look at, we're talking about systems change, and I want to move into that and make it more complex, or maybe easier, because I find myself it's quite difficult to explain sometimes what that is and how you go about it, and how do you drive systems innovations and system action, and how do you create ecosystems. So looking at, for example, the interplay between the regulatory environment and the financial markets and the green transition, how do you play there, and how do you navigate?
Well, if we look at Sweden and our capability of creating growth companies, innovative companies, like the one we have here, for example, and there are many others, I think the fact that we have been leading in listing so many growth companies in Sweden versus the markets in Germany, France, London, despite their economies are so much larger than us, still it's more companies coming to the market with innovative solutions in Sweden than in all of these countries. Why is that so? Of course, there is entrepreneurship that is fantastic, but it's also an ecosystem that works really, really well when it comes to, I will say, the regulatory framework, politicians, the companies, but also the investor side of things. We have very, I would say, educated society when it comes to financial literacy, understanding markets, and all of this help companies in their journey, because many companies, they come to an exchange to do an IPO, they raise some capital, but for growth companies, they might need to raise capital 2-3 more times more. And then the ecosystem is crucial, that you have investors that are willing to continue to fund and are informed and understand the journey the companies is on. Again, if you don't understand the journey, you will not invest again. So I think we have an obligation, as all being part of this ecosystem, to make sure that we continue to drive and support this, because that's long-term the competitiveness of Sweden.
Excellent. Interesting, yeah.
If I can just add to that. I think what's important is to provide a level playing field as well. And that means understanding true cost and slotting true cost into the financial paradigm of the economy. Because once you inject nature capital, human capital into that, then the whole thing looks completely different. When you extract subsidies, government subsidies to oil and gas, or if you made oil and gas pay for the damage caused environmentally, or to the health costs of a community, which are currently borne by the community, not by the company, then that investment doesn't look so attractive. And so I think true cost is something that would change the paradigm, and that's what we need ultimately to transition quickly enough to keep 1.5 alive. We have to change the way we look at running our systems, and our systems don't work the way they are. It's been said before, this notion that we can extract infinite GDP growth from finite resources is brain damage thinking. We can't go on doing that, and the planet's telling us we can't. And there's no point negotiating with a planet because Mother Nature doesn't negotiate with us, but yet that's what we're trying to do, and that's what we're doing here. It's about negotiating with the environment. Nature doesn't negotiate, and that's why 2050 has now become 2040, because we can't make 1.5 by 2050. We're on track for 2.7, and that's not a world that I want to live in. So we've got to stop trying to think we can negotiate and inject true cost and change the financial and economic paradigms by which we operate.
Would that be your advice to leverage systems change?
Yes.
Excellent. Hanna, how do you look at systems change, and what type of future collaboration would you see for you or for others to enable systems change?
Well, I think for us, as I said a little bit in the beginning, we have two focus areas. One is, of course, leveraging our platform, which we have discussed a lot, but also as a tech and a streaming company, what does that mean for actually the net zero journey? Because we have, of course, committed to that. And there, I think it's all about collaboration. So we're super dependent, given that a lot of digital kind of business models are super reliant on the value chain. So it's all about, if we can't fix it on a systemic level, it doesn't matter what we do. So we always try to think about, if we succeed with something or fail with something internally, we always share it. That's our ambition, so that we can kind of always think about how can we scale that. So I would say that's our ambition, at least on the net zero journey side of it. But I also wanted to add to your point a little bit, to make that systemic change on a more content and get people exposed to the science and solutions. What we also struggle with, but really try to do as well, is then how do we kind of, first of all, get people exposed to it, but currently the system is the way that people need to experience something really bad when it comes to climate before they take action. And if you then, through your documentaries or maybe a podcast or so, when people tell the stories and you can feel it and take action through their experience rather than that you have to do it yourself, then I think we are really onto something. So hopefully do that, but then you need to tell really good stories.
Just to that point, that's what happened in Australia. We had the worst fires ever in 2019, 2020. 3 billion animals died, dozens of people died, tens of millions of dollars of infrastructure was destroyed. And then we had the 4 worst floods we've ever had, which destroyed people's homes that weren't impacted by the fires. There wasn't one person in Australia that I know of that wasn't impacted because directly or they knew somebody or a friend had been impacted. Climate became the number one issue at the election. The previous Conservative government never spoke about it, tried to avoid it completely. It was the number one issue, and it changed the government in Australia. And that's because people felt they felt the pain, they felt it personally, or they felt it from someone else.
Thank you so much. We're coming closer to a close of this conversation.
Can I just ask you a question then? I mean, I'm interrupting you. That's just not okay, but I will, right? Because we're colleagues, all right? Leon Festinger, the psychologist, was talking about cognitive dissonance back in the 60s, and he was saying that if your thoughts and your actions are wide enough apart, you will feel like you either have to align your thinking to cope with the fact that you're not doing anything about it, or you need to realign your actions so that you actually are closing the gap, right? And what I'm curious about is, if we take the context of the wildfires in Australia, if we're not seeing the pervasive effects across all of the matters that we need to see them in order for us to act on it, what's going to happen? Do we actually need to see the effects, or can we act before? I'm curious about your perspective.
Yeah, that's an interesting question, because different generations will answer it differently. And the reason for that is a thing called habit. So single-use plastics, for example, it's harder to get somebody from my generation to stop using single-use plastics, to take their rucksack to the supermarket and fill that with vegetables rather than take the plastic bag because they forgot their own bag. So habit plays a big part in that when you haven't been personally affected. You've got, it's easier with young people because you can impact them with a documentary, and what they do is they go home. This has actually happened with the plastic ocean. The number of parents who told me that their kids watched the film, came home and said, "Mum and Dad, why are you wrapping our sandwiches in plastic? Don't you know that's going to release phthalates and other chemicals into my system?" And the parents are going, "What are you talking about? Come and watch the film." So they'd watch the film, and then there would be this discussion in the house. And the parents would have to think seriously about their actions going forward. And they had this constant reminder in front of them, which was their children and the health of their kids. So when you have those reminders, if you haven't been personally affected, it's far easier. But it is difficult, and I think this is why it is much more difficult getting the message of issues like climate and biodiversity loss across to older corporate executives, because their view on the future is so short. They're looking at what they're going to do with their retirement, how much money they're going to spend, where they're going to go, what they're going to buy with it. They don't have the energy to change. Yet a young person who's looking forward to 60, 70 years of their life has this whole future in front of them and views things completely differently. So I think it's a generational thing.
Thank you. I will ask a last question, and I would start with Fredrik. And it's about, which you already started, listening to each other. What would your key takeaways be from this conversation? And also, what are you curious to discuss more? Not today, or not at this panel, but maybe when you step down.
One word that sort of stick a little bit to me that I think I'm going to take home and discuss internally is a little bit storytelling. I think that could help us in our journey.
Yeah, I mean, I agree, and I think just because I need to answer to what you were saying, and I think that if we can use the conduit or the interlocutor of experience that is documentaries, environmental documentaries, to portray, I'm not a fisherman living in a village that's being flooded, right? If we can use that as a way to enhance the climate literacy and the action that's needed, I think, storytelling will be integral to that end. So that's what I'm bringing with me as well. I think this has been a good conversation. Yeah. But storytelling in and of itself, I mean, both of your documentaries are doing a fantastic job at portraying the data. It's data-driven in that you're understanding that it's not just an emotional commitment, but also one that's founded on the scientific ground that everybody here is standing on. And so, the triangulation between the creative community, scientific community, and the political community, and the business leaders that are here, I think is, going to be helping democratize action and achieving the collective goal that we're all here to complete.
I think just briefly, it's that we're all in alignment. It really doesn't matter what background you come from. We're living a present and trying to make the present serve the future for our children, the next generation. And I think we're all in greater alignment than we actually realize. And I think that's something I would like to bring out more in discussions going forward.
And I guess I have to finish diverse then. So I was going to say storytelling, but I'll do something different. So I'd go for breaking boundaries as well. Adding things where they shouldn't really be. So everything from, adding that climate data to a listed stock exchange and so on. So I'll go for that.
Thank you so much, all of you. Thanks panelists, and thanks listener here live and you online everywhere where you are. And we will continue the conversation. Thanks.
Hello and welcome to this final discussion on Finance Day here in the Business Sweden pavilion. Welcome to all of you on the digital stream and to all of you here, the brave that are still here. There is drinks afterwards, so you did a good choice staying here. For all of you on the digital stream, I hope you have a beer or a drink handy anyway. This panel is going to discuss sustainability, the green transition, maybe from the perspective that we are in very turbulent time with energy crisis, we have geopolitically uncertainty, inflation, and does it impact the green transition? Is there a hold? Is there continuous activity? And we have perspective from different type of, let's say, players in the market, the corporate, the investors, and SEK. So we have half an hour, and let's jump into it by actually starting. If I can ask all of you to introduce yourself, your name and company, and what you represent. Just continue.
Can you?
Yes.
I think you can hear me now. I'm Jennifer Anderson. I'm co-head of Sustainable Investment and ESG at Lazard Asset Management. We are a large global equity and fixed income asset manager.
Thank you.
Hi, I'm Maria Samuelsson. I'm with the Swedish Export Credit Corporation. We do export finance, specialized. We're a bank, regulated. And my role there is a Chief Sustainability Officer.
So my name is Ebba Grithberg. I'm head of sustainability at Spotify, the audio streaming company.
Great, thank you. So let's start maybe with the investor perspective. Do you see any slowdown in investment in sustainable project business companies because of other priorities, or because right now actually oil companies are returning quite well on the exchanges worldwide? So what has happened to the investment community around ESG in this turbulent time?
The first point I'd make is that some of the disruption and turbulence in markets actually makes for very attractive investment opportunities. It changes the valuations of companies quite dramatically, and so for active managers, that's an opportunity for us to find opportunities for companies to go into our clients' portfolios to make sure that we're generating the returns that our clients expect. So some of the challenges that we've seen with the Russia-Ukraine war have caused a review of EU policy around energy security and energy independence. That presents new attractive opportunities for certain companies that are able to help deliver that. So it's very much understanding how some of this disruption can lead to new attractive investment opportunities, as well as trying to understand some of the challenges that higher commodity prices, inflation, interest rates also present as headwinds to companies and the performance of portfolios. So perhaps that's the first point. In terms of the change that we see from clients, perhaps in focus around sustainable investing, I'd argue that actually the resolve of particularly European investors has perhaps even got stronger through some of the turbulence we've seen over the last few years with COVID and the situation in Russia-Ukraine. And I think that the EU regulation, the SFDR regulation, is kind of firmly cementing ESG and sustainable investment into the capital market structure in the EU. I think that there is a kind of politicization of ESG and sustainable investing in the US, and it's very difficult to not see the fragmentation in the US very much at a state level, where ESG and sort of the concept of woke capitalism has become very much a political debate. There's also quite interesting activity in Asia as well, starting to look more at sustainable investment. So I'd say it's a mixed picture on that second point.
And from a corporate perspective, would you say that you have other priorities now, or is your sustainability agenda still intact, or how are you thinking about the environment?
For us, I mean, our sustainability agenda is very much intact, but I do think that in the coming years we will need to think, I mean, as corporations, as companies, we will need to be even smarter in our sustainability work, thinking both when it comes to kind of how can we create win-wins. I mean, electricity is just such a great example. When electricity prices go up, of course, it's very attractive to be more efficient and effective. So I think that's one point. And the second point, I think, is we need to become even more careful of actually using our superpowers as companies. And I think that's an important part. For sometimes sustainability has been like something on the side, that you do something like you do projects which is not effective, cost a lot of money, and you wouldn't have the most impact when it comes to sustainability. So I think it's super important that the companies look at kind of where are they uniquely positioned to drive change, and how can they leverage that. I mean, for us being a platform, of course, we are committed to reach net zero emissions, but that will not kind of move the needle in the world. It's more about kind of how do we use our platform. We have 450 million users. How can we leverage that to drive positive change in the world? So I think, by doing that, that's kind of our business as usual, but tweaking it a little bit. And that's also kind of a cost-efficient way of driving sustainability.
So if I interpret your answer, both of you, it's no major change, but maybe slightly fine-tuning of the focus and how to set targets, but still the agenda is intact. Is that correct?
Yes, I hope so, but I do think that there are companies that will slow down. But I mean, I think we really have to kind of power through this in order to reach our commitments.
I think we can't underestimate the importance of regulation, and obviously with the Inflation Reduction Act in the US, I mean, this is a huge package of measures that is including tax breaks, subsidies, that will really drive new industry, new jobs creation in the US, and new investment opportunities. So, those kinds of big announcements, those big policy announcements, really make a difference in terms of the agenda. So. I think that a lot of the agenda does still rely on having the right policy signals from governments. We obviously do see as well with the net zero commitments that a lot of large corporates are making, really kind of significant investments in capex. Some of the big mining companies are committing billions of dollars in decarbonising the commodities they produce, because they know that ultimately that will help them to continue to be able to sell those to other technology companies that have made net zero commitments. So there is a very strong commitment on the corporate side, but having the kind of policy and regulatory backdrop to support that is clearly very important for the speed at which we need this transition.
Maria?
I would say that to understand what Jennifer was alluding to before, the financial market participants across the scale, independently if you're an asset manager, an asset owner, or a bank, or another sort of intermediary in the finance markets, the drivers for enabling finance to be a catalyst of change are slightly changing for the past few years. And we have gone from this voluntary space where everyone has been pledging that we will be part of the change, into now being regulated into being that catalyst. And that is something that is going to hardwire these kind of topics into our decision-making processes. So we're going to be making better informed decisions for picking the winners of tomorrow. So in essence, our core business is not going to change. We're just going to be doing different things. And so we need the data and we need the processes to continue. And that, I would say, is continuing at full force. That has not stopped because of the different uncertainties in the markets.
So we have regulation coming both in US and Europe around disclosure, both for corporates, but also investors need to define the investment, what's green and not. So we have SFDR and CSDR in Europe, and in US the SEC proposal. I don't know if it has a short name yet, but I'm sure it will get it. But and all of that is sort of trying to provide transparency and data that you need, but it also creates quite a big burden for you. So if we start with the corporate perspective, all of these regulations that are coming that might not even be harmonized between the region, how much of work is that for you?
I mean, right now, we talked about it a little before. I mean, it's a lot of work, but I do think it's needed, and I do think, especially coming into tougher times, in order to kind of level the playing field and make sure that not only companies that have
committed owners and leaders are kind of taking this for real. So I think the kind of regulations, I mean, it's a pain, but it's a necessary pain for us to kind of level the playing field and make sure that we enable, I mean, both investors but also consumers to make the right decisions.
Yeah, and Maria, how easy is it to make the right decision today?
Yeah, I would just like to comment first that I actually think it's necessary that we have this regulation, and I could wish that we need comparable, predictable, and reliable data. And we've been building an economic system for maybe 30, 40 years. Now we have a few years to do that for the non-financial data and connect it into financial analysis, which means that we cannot spend the same amount of time figuring out the right system. So we do need to work with a bit of uncertainty. The intention of the game and the intention of the rules is what we need to focus on. And I actually welcome regulation in that sense, because I think what we don't want is more years of uncertainty on how to define what is what. Then we're going to get uncertainties in the market, and the market doesn't work well if there are uncertainties. So we need clarity, we need less complexity in order to make efficient decisions. And in that sense, that's what I'm aiming for. That's where it's supposed to be business as usual.
And I mean, we have multiple reporting standards today. We have now regulation coming. But from an investor perspective, is it important with global alignment here? So that you have sort of one way of attracting data and transparency from company on their work? Or how do you see the fact that we are developing different standards around corporate disclosure on sustainability?
Yeah, I think different standards on corporate sustainability is not helpful. I think that companies or corporates find that very challenging to understand which of the data providers they should pay most attention to, and also how to get their ratings corrected if they're inaccurate. I think that the unfortunate situation is that we still don't have that kind of global standard, which makes it challenging. There are certain companies and certain markets that get penalised because the data is patchy and of poorer quality. Emerging markets is one area, and smaller and mid-sized companies also get penalised because of that. But I think at some point we also have to kind of stop asking for more and more data and also decide actually what we're going to do with it. I think that we do have fairly good data on carbon emissions, for at least 60-70% of the universe, and we need to start thinking about how we translate that into financial metrics that we're actually building into models to think about where the long-term valuations of companies are going. And I think that's really the piece now where I think investors are starting to do much more detailed engagement with companies, really digging into their decarbonisation plans and understanding, what's the capex going to be required, at what points you're going to have to make those capital commitments, what does that do in terms of the returns, and are these companies that I want to continue to own in my portfolio. But I think that whole transition piece really actually relies much more on engagement with companies. And as active managers, we have the ability to meet with companies and to do that for the companies that we own in our portfolio. So I think let's sort of balance all this kind of data requirements with actually kind of doing the research to really understand, what the costs are for companies and how that's going to impact their long-term viability.
Maria?
Yeah, and if I just add to that, so we basically have two legs to stand on in SEK. We have lending, and then we fund ourselves in the capital markets. So we issue bonds. And it's quite interesting to see, we're in a conference now speaking about a green transition. We just recently issued a green deal, a green bond, and the investors buying those bonds are increasingly asking into the other elements of sustainability as well. So I think that's going to be an important part of connecting the data and finding how are the, for instance, social dimension, the just transition dimension, impacting systemic risks, impacting material risk drivers of companies, impacting also new growth opportunities for companies. So we're going to apply the same lens as we have been doing now for maybe 4 or 5 years on green, but adding the other elements of the social dimension. So I think we're just at the end of the beginning, and then we're going to have the next wave and the next wave, and we're going to get better and better in making our analysis and decisions.
Maybe just one other thing is we talk about corporates being under scrutiny from the ratings providers, but we as asset managers now receive a huge amount of requests from our clients. Our clients are, pension funds, insurance funds, family offices, and we also obviously dealing with a lot of the big investment consultants. But the amount of kind of RFPs and DDQ questions that we get around ESG is also a significant amount of time and resource. So it feels like we're pushing to have better transparency, better disclosure, better ways to measure and quantify. But that is actually taking up a huge amount of time and resource at all of the organisations that are represented across, in the investment value chain as well as corporates. So I think thinking about that balance is important going forwards.
Ebba?
Yeah, I mean, I think something also to add here. I think like we're talking with investors, and of course, I mean, you're looking at kind of regulations and kind of really what the company is doing. But what I'm missing sometimes is also looking at the kind of the future proving, not only kind of the very kind of policy, not the checklists, but rather kind of how well suited is this company to survive and thrive in the future, and how kind of much positive impact does this company have or have the potential to have? I think that those elements are sometimes missing in the discussion, and I think that will be crucial for the big transition.
And on that, we have today, I think, around 2,500 companies that have signed Science-Based Target Initiative, meaning that they have set target. And if I understand correctly, the information I received during these days is that if everybody meet their targets, we actually will meet our goal for the Paris Agreement of reducing emissions with 45% by 2030. So how, from a Spotify perspective, how does your sort of net zero strategy looks like? How are you going to not only set targets, but also executing on the targets?
I mean, for us, I mean, as with almost all other companies, kind of, especially in our business, it's a lot about the scope 3, of course. So it's about working together with our suppliers and putting those demands. And I think coming to Jennifer's point here of the clarity, I think that is so much needed to say, okay, we are really serious about our ambitions, and therefore all suppliers also need to be serious about their ambitions. And it puts like rings on the water, because that's one of our main kind of areas that we can have a contribution in. It's not our impact as such, but the demands we put and kind of being role models in the industry to live that. So it's a lot about kind of working with the right partners, and of course working with our own internal processes. How do we make streaming green? And I mean, that's an industry that hasn't really been in the spotlight before, but that we're really determined to work together with peers in the kind of defining how that is done in a good way. So those are two of the parts. But of course, for us, looking at our emissions, we have a lot of emissions in the user phase, which for us is very difficult to kind of control. We don't control your kind of electricity agreement at home when you charge your iPhone to listen to Spotify. So it's a lot about finding those kind of collaborations across industries, working with device manufacturers, but also working, so how can we incentivize and also, educate our users of what they can do in order to make this transition. So it's a lot about kind of putting the clear direction and making that also well known to both our peers, but also to our partners and other parts in the industry. That's the main topic.
Maybe just to add, I think it's important also to recognise that when you're thinking about carbon emissions at the portfolio level, that there's that Pareto principle where 80% of the emissions are often represented by just 20% of the holdings in the portfolio. And so the Science-Based Targets Initiative is great at helping companies to set out clear pathways for decarbonisation, but it doesn't really have those pathways available yet for the very heavy emitting sectors. Those are the sectors where we need to really prioritise our engagement with company and our research to understand, their transition plans and, what they're going to cost. And so I think we have to kind of just balance how useful these kind of initiatives are in really understanding, where the carbon risk within your portfolio sits, and really understanding which of the companies that we need to invest in that are going to genuinely deliver a transition in the real world, rather than kind of rebalancing portfolio carbon metrics. The other point I just want to make on this is around emerging markets, which are at the moment kind of having to be sort of subject to a one-size-fits-all approach to kind of thinking about net zero for portfolios. And it's really important for us to recognise that emerging markets countries, and there's a huge kind of variety of countries within emerging markets, and we kind of put it all under one bucket. But just trying to think about the different pathways for emerging markets, thinking about having different benchmarks for measuring what emerging markets approach to net zero might look like, and also having different expectations of the corporates that sit and are domiciled in those different emerging market countries. I've heard that message a lot around the sessions today, is just really starting to think about how we make sure that we're having an inclusive approach and thinking about the opportunities of investing in emerging markets. Some of the large companies in emerging markets are making serious investments in renewable and low carbon technologies because they see that as being an attractive growth area for the future. So I don't want us to kind of think about emerging markets being too difficult from a kind of net zero perspective. We actually just need to refine and evolve the frameworks that we're using currently to think about this.
Yeah, and if I just add to that, our core business is financing exporters and buyers and suppliers out in these emerging markets and developing markets. So SEK is active in 62, I think, countries. And so we're currently also doing this. A large part of our portfolio is out in the world where we have not the same pathways. We don't have access to data. So what we're in the middle of in order to establish our strategy for our net zero target is to find out how can we assess what is our piece of financing contributing to for that part of the railroad in Tanzania. And that there are no methods around this. So we're trying now actively in the ICA space to find out what should the methods be. The private sector, the private banks, mostly it becomes a bit technical using the PCAF method. What is the methodology we should use for these kind of assets? So it's turning into an accounting exercise for some time now, but I think it's extremely important to understand where your starting point is in order to take the right decisions forward, so you make the right strategic choices when you then decarbonize your balance sheet.
And I was part of a panel before this, and the theme there was maybe storytelling. And one of the things that I would like to ask about is how important is sort of to try to visualize impact of sustainable investment. So we say that there are trillions of dollars being allocated to sustainable funds or assets, but what does it mean for the society? How do we sort of create a story around what we are achieving when we are doing the green transition? Do you, from Spotify perspective, do you have any thoughts about how to explain to your customers that all this work that you put in lowering your emissions, setting your targets, that they understand what that means for them?
I think for us actually, we're not too much actually about communicating our own sustainability work to our customers, because I think we're for us it's more important. That's a kind of the basics. We need to kind of take care of our own backyard, make sure our own house is in order, to be able to kind of use our platform. So it's more about, because I think for us the potential is really in kind of how can we enable others to drive change, and how can we be the platform for that, both when it comes to storytelling, showing kind of versions of the future that you can kind of feel and react to, but it's also on how can we give voices to emerging markets and the most affected people and regions in this. So for us, we're not really kind of storytelling around our own sustainability work to our customers, because we don't think that's the main story that we need to tell, but rather like how do we use our platform, and where storytelling becomes super, super important, because as we talked also about in the previous panel, science is super important, but we know the facts, we know the science, and apparently we're not changing fast enough. So how do we make people feel and act based on that? Yeah.
And maybe Maria, one question for your financing. How do you look upon sort of the impact that financing leads? Do you have any way of sort of trying to articulate the impact you made over a year?
Yes, and I think that's the next step really for the sustainability movement overall, to measure outcome. we're not there yet. I think we are spending a lot of time talking about the green deals, the transactions, the capitals being moved, but do we really know what kind of impact that has? But there are work being done, how to define that, how to not fall in the trap of saying that you bring impact when you don't really prove it. So I think that's the next big thing for us to work with. However, in the meanwhile, what we do is that we analyze the transaction and the financing from an impact-in perspective, i.e. what does climate change, biodiversity loss means for the actual transaction that we're financing? What's the financial risk that brings into the business model for that company? But also the potential that it brings. So it's both the sort of picking the winners of tomorrow, but also avoiding those that will not make the transition. That's banking. That's what we have to do. We have to get the money back. Compared to Lazard, where you have to get a return. We have to get the money back. But the other part we do, which is quite substantial, is that we work with impact out. So we have a clear policy saying that on these elements of sustainability, we analyze the transaction and we do deep dive analysis. It goes into the credit decision, so it's part of the overall assessment of the business risk. And the impact out is, of course, then what SAK's financing activities means for the communities and the people and the planet. So we are really working with the double materiality that's going to be essential going forward. So the regulation that we were speaking about.
I think it's important to acknowledge that we have a subset of our clients that are interested in understanding the impact metrics of their portfolios. Some of them just continue to want to see the financial performance of the portfolios, and that's all. But I would say and agree that we're at the very early stages of understanding impact metrics and how to report those. I think it's something that our clients are really keen to see because it's very complex to explain to your end beneficiary of a pension fund how investing in a company that's transitioning is providing an environmental benefit. At the moment, it's much easier to show the carbon footprint of your portfolio and that it looks very low against a benchmark. That's a very simple message, but it means you end up investing in companies with low carbon footprints. So that's probably why Microsoft continues to be one of the biggest holdings in ESG and sustainability funds. And I think if we're going to genuinely think about how to mobilize capital to be supportive of a transition, we need to think about metrics that do paint a fuller picture. And it is, again, about some of that storytelling. I think it's probably a balance of the two. Some of it will be about numbers, and then some of it's about stories.
Thank you. Okay, we have come to the last question, the same for all of you. So what is, from your perspective, the most important thing to drive this green transition forward and maybe even faster than what we see today?
We haven't talked about this, but I think carbon pricing is still the piece that's really missing, particularly for investors and how they would value the negative externalities in a way that would really shift capital.
So what is the right carbon price?
Higher than where it is. Yeah, I think it probably depends by market as well.
Maria?
I would echo that. I think that to find incentives to drive actual change in the real world, regulation is second best, pricing is better. So we're waiting for the price on carbon.
I agree, but I also see the importance of collaboration. Collaboration kind of across borders and across industries to make change happen.
Thank you very much, all of you. Great insight from different perspectives of the world that we operate in. And with that, we are done with Finance Day. That feels fantastic, but sad also, because tomorrow is not going to be as fun as today. But thank you all who has been here and on the live stream, and for you that are here, there will be some drinks now. So thank you very much, and give an applause to the panelists.